Good morning, everybody. Or in the case of Henry, good evening to our friends in Australia. Of course, it is indeed a beautiful morning. I had a day off. We had a public holiday yesterday in Germany. So that's why you are seeing me today and not on a Monday, here on a Tuesday, to see if we can catch some nice trades. I'm not so sure if somebody's going to join me today. Jonathan missing in action this morning, but we'll see. The nicer the surprise then, of course, later. How's everybody doing? I can see we have Vinicius already here. Good morning. How are you doing, man? We have Amal, one of our frequent viewers, same as Vinicius, actually. Good morning, Amal. How are you doing? We have Steven. Beautiful morning. It is indeed Steven. Henry, I already said. Hi. And we have Thiago. How are you doing, man? Hope everything is good. And last but not least, Rachel and Dead son. That's good. I would be dead daughter then in this case. I have a daughter, not that little anymore, though. And not to forget, of course, Hussein. Hi from London as well. Beautiful day it is. We have a quite interesting week ahead. I think a lot of things to talk about, a lot of potential trades, in my opinion, also that we could take more on that later, of course. I'm going to run the intro and I'm going to see you in 15 seconds. All right, guys, before we start, remember to hit that like button, subscribe to the channel if you haven't done so already, if you're watching on YouTube, that is, of course. And hit especially that like button so that weird YouTube algorithm can attract some more viewers. I said it earlier already, we have quite a week ahead. We have inflation data coming out tomorrow, which of course is going to be very interesting. Like, one key point here that interests me the most is that the forecast for inflation data, that is year-over-year data, is a little bit higher than the last reading. Last reading was at 2.3%. The forecast is 2.5%. So that compares, of course, then May 2025 to May 2024. This is still, and this is so important because it's still outside of what the Fed would like to see. So Jerome Powell and his colleagues, they would like to see, of course, an inflation rate of 2% or maybe even a little bit lower, because that in turn was justified then for them to lower these interest rates again. At the moment, we are still in that interest rate environment of 4.25%. As Jerome Powell also said, actually he said that over a year ago, interest rates probably going to stay higher for longer. And of course, this whole tariff things by Donald Trump going on has made the expectation for inflation falling under 2% a little bit less likely. So this for sure is going to be a very interesting one coming ahead where I think the markets will react violently to this. For me, also interesting if we compare here, for example, the USA with still, historically speaking, a quite high inflation rate environment. If we, for example, compare that to China, where the actual inflation is at minus 0.1%. So de facto, they already have somewhat a little bit of a deflation there. We've also seen that was last week in the Eurozone, the inflation coming below 2%, 1.9%, I believe it was. So we had the ECB cut the interest rates. So in terms of that, actually the USA lagging behind a bit. For you tomorrow at 2:30 CET, that is, remember, if you are, for example, on a high stakes account trading 2 minutes before the news release, 2 minutes after the news release, you're not allowed to open new positions. If you're in the position, you're of course allowed to hold that through the news event. Of course, that's always the question, how wise is that? As I said, I expect a different number than 2.5%. I don't think it's going to be higher. I wouldn't be surprised to see something like 2.3% actually. And that, of course, would be very positive for risk on assets such as the S&P 500 and or Bitcoin. Yeah, talking about a Bitcoin, and Amal is saying that I didn't expect Bitcoin to blast like this. And honestly speaking, I also didn't expect this. It's kind of funny. This is from last Sunday. No. That was already more than a week old. So that was in the beginning of June. Something I shared with my community of traders, where I said it's a little bit weird. The structure we are seeing right now is either going to be a double top. Something like a double top. I'm not referring to what we're currently seeing. I'm referring to what we saw here, because that, let me quickly adjust that again here. That looks a lot like the structure we saw in 2021, where we also had like this early top, so to say, like the one we had in February of 2025, then prices going down, coming up again, and also making, funny enough, this double top, like one here and then another one here. So that, by that logic, and I'm not saying this is going to happen, guys, more on that in a moment, we could actually see something like this price going a bit higher, maybe like 150, maybe 120,000, and then coming quite massively down again. Now, I'm not saying that this necessarily has to happen, because there's a danger if you make simple comparisons like the one I did here. I'm doing this right now because I saw that during the last week a lot on social media, that people kind of compared the structure, the fractal, so to say, we saw in 2021 for Bitcoin. That looks a lot like what we're seeing right now. And because history is going to repeat itself, we have to slump down now to, I don't know, 85,000 or 80,000 or something like this. While that certainly is possible, we have to acknowledge here something, the fact that we as human beings, we are very much drawn to seeing patterns where no patterns exist. You know that when you look at clouds, you suddenly see like things forming that are not really there. You know, oh, this cloud looks like a ship. This looks like a seahorse or whatever. And the same applies very, very often for technical analysis on a simple level, where you simply compare, wow, this structure looks exactly like the one back then. Although the fundamentals that drove the structure can be very different from what we saw, for example, 2021. Remember, just those 4 years ago, crypto was still really in a whole different state. We didn't have so much institutions interested in Bitcoin already. For certainly not somebody like BlackRock. Certainly, we didn't have any Bitcoin spot ETF. So I rather think that's for now a positive sign. I think this could mean we are finally going to see, I really have to say, this the structure that we've seen in all of the other markets, all of the other cycles, I mean, of course, where we see the breakout from this green channel of our logarithmic regression to the upside, like we saw in 2017, like we saw in 2021, like we, by the way, also saw all the way back in 2012. And maybe if history repeats itself, we are going to see that also with Bitcoin really reaching prices of 200 to 300,000 US dollars. Amal is and Thiago are asking on Ethereum. I get that many of you probably are, I want to say, a little bit trapped in Ethereum, because Ethereum really has been underperforming. It has been underperforming, in my opinion, for a reason. And this is also the last I want to say about cryptocurrencies today, because obviously we want to concentrate a bit on assets that you guys can trade on the 5ers, or usually trade. You can trade Bitcoin. However, the spread is not so favorable. That's why I personally don't trade it with my 5ers evaluation account. So we, for Ethereum, the story is different, in my opinion. Ethereum, or let me put it like this: the reason for the underperformance we've seen in Ethereum is that Ethereum, first of all, changed from proof of work to proof of stake. That was also, I think, around about 4 years ago. And since then, it has been underperforming for the majority of the time. And the institutional interest that is there is more for Bitcoin. And we can see that very clearly, for example, if we look at the chart when we measure Ethereum versus Bitcoin. So how many Bitcoin do you have to pay per Ethereum? And we can see ever since the bull market started, this has been continuously going down. So Ethereum has devalued versus Bitcoin, and as a matter of fact, the slope has even increased. Yeah, so it's not a good sign in my opinion. I'm not a big friend of Ethereum. As a matter of fact, if you look at something like Solana, can do the same thing as Ethereum but better. But I might be wrong. I know many of you are expecting an altcoin season still. I think we had this already. I think the altcoin season this year were meme coins, and I think this is about to run itself dead as well. Might be totally wrong. There might be a couple of altcoins that will greatly outperform Bitcoin in the next couple of months until the end of the year. However, my bet always would be here on Bitcoin. Because, I mean, let's be honest, all other altcoins, they don't have any utility. You can always argue Solana, yes, Ethereum, maybe Ripple, they have utility, but nothing that cannot be done long-term by Bitcoin. But that's just my opinion. Don't necessarily listen to me. There might come an altcoin season, there might not come an altcoin season. As a matter of fact, on my own channel, The Good, The Bad, and The Bitcoin, a while ago, I did a video about the long-term performance of altcoins, and I found out there that well over 90%, I think it was 92% of the altcoins that are currently in the top 50 4 years down the road either underperform Bitcoin or, as a matter of fact, end up losing you money, many of them losing you more than 90%. And that alone speaks for Bitcoin. And yeah, of course, you're not going to have those 10x anymore, but if you're into investing and not into gambling, Bitcoin is the choice. Yeah, UK swing trader is saying it. 95 watching, 60 likes. Smash that like button, folks, please. Do me the favor. I'm going to do that myself actually now as well. Thanks a lot for that. Yeah, anything you guys are in particularly interested? I am, of course, looking at gold again this morning, which is like a never-ending story of appreciating prices, especially in lights of maybe what we are seeing at the moment in California and Los Angeles with the riots there. That's for sure something that kind of puts a bit straight, excuse me, on the narrative of the USA, first of all, being the leader of the world, of a so-called free world, and the US dollar being a safe haven investment. So when we look at gold, obviously we need to look at the US dollar as well. So for now, what I'm personally looking at for gold is I missed the long positions this morning, actually, but well, this one actually was from, oh, never mind. I have here a different time zone. I was already like, I missed this one. This long position here this morning was okay. I might get the chance to have another one. So I would prefer the upside when it comes to trading gold. However, I'll do here what my trend following system is going to tell me. Trend following scalp system, which already had two nice little long trades here on gold this morning. Don't be irritated by the fact that this shows it's like 4:50 in the evening. I have a time zone set to UTC +8 here because I'll use this a lot for my community, which is located in Southeast Asia. So don't be irritated by this. So this is very much what we saw. I think that must have been like an hour ago. So around 9:30 CET, but things are coming down. Parallel to this, we probably could see an uptick in the US indices again, which are performing very well, right? I mean, who did expect that? Who did expect that we would see the S&P 500 and the NASDAQ like outperforming like this? We talked a bit about this. I remember Jonathan and I about this possible V-shaped recovery, but to my surprise, it has been this strong. However, this of course was fueled, especially if we look here at the NASDAQ, fueled by better than expected earnings, especially from companies like Nvidia, for example, who earn more per share than analysts expected. This is, of course, driving the markets there. But things are looking pretty good. So we're very much in line with my model again that says, well, 1 year or the year after a new election in the USA, so November to November, November 24 to November to 25 are usually good years. And after this, we see a correction on the markets. Well, I don't exactly think, Patient Pip, that gold is going sideways, no? I mean, if we look at the chart of gold, this is like super strong. Yeah, if you just take into account like this last structure of the last weeks, so this one we saw there, you might call this sideways, but be aware, this is a structure we've seen a couple of times already in for gold. So the structure, this one here, which I don't know, is this called like a triangle? I know some of you are into wedges and triangles and so on. I'm not so much, but it's kind of a structure we saw here. It's kind of, to a lesser extent, the structure we saw here. So this seems to be something that gold likes to do every now and then. After a strong move up, it goes into a more volatile sideways phase. When it accelerates up again, volatile sideways move. So it could begin to form the new leg now. Of course, there's always the possibility that we break down there as well. Symmetrical triangles. Yeah, I think that's it. Yeah. Thank you for clarifying this. So let me delete this here quickly. I actually wonder if somebody is joining me. Hold on, I want to write here. All righty. This one, this one, this one. So gold, I'm going to have an eye on gold, waiting there for something to happen. My account is also ready. I'm going to share later also the statistics for my high stakes account with you to show you how I'm doing in developing my trend following gold strategy there. The one that's also for me very new. Yeah, I saw the comment just now. Maybe later. I mean, it depends, Amal, on what time period or time frame we are looking at. Like long term, this trend is very, very strong. Yeah, there's always the possibility, especially usually when we close below this 8 weeks moving average, that we see pull back to the support bands. So there's always the possibility that we see prices dropping to somewhere here in the vicinity of $3,100 at the moment. However, I would not trade this, also not with a swing trade, because it's a bit like going against a very strong momentum. Of course, you can be lucky that you kind of time the moment where this happens. But swing trading wise, I would always be looking more for the long entry. So really, like Money Glitch is saying here, I'm long in gold from the dip. And yeah, I would be doing that as well. Now for this system here, actually you just see the dots. These are dots from price action fed in by some other. I cannot display there too much because this would go deep into my proprietary trading system, which I cannot fully share with you. I hope you understand this. So I would sell gold at the moment if this whole structure flips. So if instead of those green indications for price action, I would see red ones, like we saw to an extent, for example, here on well, it was in the early session actually this morning. However, this is a scalping system, and so be aware with this system, I try to like take $5 to $6 out of the market. So a price swing of $5 to $10, usually $5 in gold. So should I get a sell signal now here, for example, at 3,329, I would aim to close that one at 3,324 again. So it's a very short-term scalping system. It works because Deanna is asking here, what's your best indicator for gold? Works very well. For me, it works. It has been a long time developing this system. Actually, those guys who have been watching for a while will remember when I started live streaming with the 5ers actually on a regular basis. I said, I hate trading gold. I hate trading gold. I always lose money when I try to trade gold. So naturally, when I asked you guys, what shall I trade live? You said, trade gold. So I said, okay, that's going to be a nice learning for me because I'm starting at the same step as many of you probably are, getting to know an asset, try to find my way in trading this action. So I've gone for the past really 3 months almost now through the phase of seeing what is good, what works for me there, what doesn't work. This is what it all boiled down to. So I completely changed from a contrarian system to a trend following system. And this one has been working quite well for me. As a matter of fact, let me maybe share with you really quickly how things are there at the moment. Give me a second. I need to log into the hub there. There, here we go. This one. No, this is wrong. So stop this one and change to a new one. Yeah, this is the one. Now I just need to edit. So this is something I forget. So this is for the past, I think it's like 3 or 3.5 weeks where I've been training this live and getting better. These are the statistics I achieved so far with manually trading this. So this is not a automated system yet. I will eventually automate it, but at first, for me, it's always important to manually trade your system because like this, you can find better what is working, what not. So you can see I'm now at about $550 of a profit target of 1,600. This is a 20K high stakes account. I've been profitable for 3 out of 3 days, which is also a criteria. Interesting, of course, always hear like, what is the total number of trades? 42 now. What is my profit factor? 1.5, which still could be a little bit higher in my opinion. I make up for this with having a quite high win rate currently of 71%. So in total, I'm up. I'm satisfied. The curve is looking well here. Of course, this does not mean it's going to continue like this. But the first goal for me, as it should be for you, if you have a high stakes account or if you have a boot camp account, if you're trying a new system, let me put it like this, is to get consistency, to see like I always stuck to my stop loss. My stop loss here is 0.5%. So naturally, my biggest loss was slightly over $100, 0.5 of roughly over 20,000 $20,500. As a matter of fact, now my average profit lower because I scalp. So my risk reward ratio by nature is lower than 1. This is why I need this high win rate in order to make this system profitable. But this is what works for me currently. So yeah, my goal is here to share with you and be very transparent about how this continues. So should I tank the account like in the next week or next 2 weeks? I'm going to share this with you here. If I manage to get to the profit target and get this account, as a matter of fact, then into funding, I'm going to share this with you. That's the nice thing, as I said, despite me having been an investor and trader for 26 years, trading gold on such low time frames. I will talk about the timeframes in a minute. I think somebody asked about this earlier as well. Is something new for me as well, because it's an asset I was not successful in trading in the past 26 years. So I put it totally on the side. Same with oil, by the way. And since you guys asked me, I worked my way into it. So this definitely is also something, we can talk about more. How do you go by of creating a system, optimizing your system, the mental strength. Also, in my opinion, that is one of the most important aspects you need to develop. But this is like something you probably could do like a whole live stream about as well. So definitely something we have, for example, also with ABL Labs planned. For those of you who do not know, we also have with the 5ers something called Alpha Beta Labs, where you see, for example, Mike and LJ streaming every morning. There's a whole community surrounding this, where we also have courses. I have, for example, a course on fundamental analysis where I'm working right now on a crypto course, something like how to design a system, how to not so much actually design a system, but how to ensure that your system actually is profitable is definitely something that I understand many of you are interested in. I'm just scrolling through here a bit to see. Yeah, like exactly the question you are. Could you briefly go, swing trader, UK swing trader is asking, could you briefly go through the steps necessary to build a trading system, please, if you have time? Maybe very, very quickly, because I know this is like something you guys struggle a lot with, and I understand this. So this is my way. Now, my way, and I should say 2025 doing this, because just 3 or 4 years ago, as a matter of fact, just 1 year ago, things would have been very, very different. I'm all about testing. So if you find an edge, so for example, what goes into these green and red dots here is a combination of do I have it on here? Of these signals, confluence long and short signals, although these are for cryptos right now, and something. Why don't I have a chart on here? Well, it doesn't really matter. And what I normally show you here, where I have my charts with the 3 moving averages, the 200 EMA, a 21 EMA, and a 50 EMA, and these dots then are a combination of the slopes of these moving averages plus price action. So if there are certain angles of slopes plus price action on a candlestick chart, that is, a green dot gets displayed here on a Renko chart. Why in a Renko chart? Because I want to make sure that we see really a nice trend. So if a green dot would, for example, appear in what was clearly a downtrend, so somewhere in here, I would not trade it because it goes against the momentum currently. Usually, however, you will see red dots in a downtrend. You will see those green dots in an uptrend. So this is all I do. I wait for this when I enter a trade. I have a profit target of $5 to $10 per ounce traded in gold. And now what you can do is you can, for example, take this information and export it. So if I load up the whole chart as much as it goes backward, and you can see it's a 1 second Renko chart. It doesn't mean there's a new box every 1 second, but it looks every second, was there a price move of $1 up or down on gold? And if it was the case, it's either going to draw a green box if it was up, or it's going to draw a red box if the price went down by $1 or $2, as a matter of fact. And so this happens every second. I'm not sure if you need to be a premium subscriber. Probably you need to be a premium subscriber on TradingView for this, but you can also do this with other charting software. It doesn't always need to be TradingView anyway, in my opinion. And I export this data, which I can do if I go here to Manage Layouts and click on Export Chart Data. I can export this data. I usually use ISO time, but you can also use the Unix timestamp. Doesn't really matter. It's just an old-fashioned preference, if you want to call it. You export this, then you find this in your download directory, and then you can take tools like Claude, for example. And I'm looking right now if I find a good example for this. Give me just a second here, guys, without me giving too much away here. Hold on. Okay, here we go. Let me just change again my layout for you guys. So I hope you can see that. Maybe I zoom in here a little bit. So all I do then really is I could, of course, manually start to analyze each and every trade, which is hideous, really, especially if you have like 10 months or 12 months or even a longer period of time of intraday trader. This is going to take you a long time. So if you are sufficient in a trading language such as Python, for example, which is good for doing analysis like this, you can do this manually. This is what I did until mid of last year, because that was then the time where language models such as Claude, which I'm using here, became more efficient and more or less prone to error actually than myself. So what I did before, maybe in 2 to 3 days of work, I can do now within probably half an hour. So you basically upload the price data with all the signals from the indicator just, and then you tell Claude, hey, this is the strategy I want to try. Can you backtest this for me? How the strategy would be working? And in the second step, then I tell the AI normally, hey, recommend something. Where is with how much leverage is the strategy still safe to trade? So this is what I did, for example, here. I compared like with one leverage, what is the largest loss, the largest downtrend compared to 10x leverage, which is very, very good here. So I can find kind of a sweet spot where I have good gains every month, but maybe not so much downturn. So as I said, I'm going to eventually do a workshop in how to do this. It is important, however, and this is why I'm a bit reluctant to like give you a blueprint on how you can do that you still use your brain, because it happens quite frequent that either these AI models, these language models, start to hallucinate. So they would show you or tell you things that are not realistic, or invent even things, or they misunderstand you. They calculated something else that you wanted, and that's why you need to be a little bit knowledgeable about, first of all, what you're looking for and the prompts, and also how to have an eye if that what the language model, what the AI proposed to you is realistic or not. But it always starts for me with a ready-made strategy that I test on data. Why do I could, the other way would be that I take my system, say, hey, tweak those settings from my indicators and for my price action, that I get a nice return. But when you end up with something called curve fitting mean that it will look for the best results in that period of time you're testing, but these best results do not usually mean, they actually usually do not mean that in the future you're going to get the same results. It's very complex. It's much more complex than what a lot of software out there is indicating, like, oh, we have AI and the AI is going to take the decisions off your shoulders. No, it's really just a tool to help you backtest, is this system worthwhile to develop further, or am I at a dead end here somewhere? Because we see that very often. What looks good is not necessarily always, or let me put it like this: what looks good on a chart is not necessarily always the truth. And yeah, Amal, absolutely right. For higher risk reward, I did this actually, as a matter of fact. I tested this a lot also. But it's always a trade-off. By the end of the day, you have to decide then, are you a trader who can accept, for example, to trade only things where you have a risk reward of, let's say, 1 to 3. So you earn 3 times the money you risk per trade. But then as a trade-off, you probably are going to have a success rate of 40% or maybe 45%, maybe even lower than this. So this is kind of the way I think Victor likes to go. Or are you a trader that needs a high success rate in order to become more self-conscious with a strategy? And for me, but this is very, very personal. Again, everybody's different. For me, usually when I start trading with a new trade strategy, I feel more confident about if I have a higher success rate. And I'm going, this for me personally is in the beginning more important than having a good risk reward. Now, as I gain confidence in that trading strategy, so let's say 3 months in the future, when I see, hey, I'm still earning money with this, then of course I'm going to tweak it because I know the fun underlying signal logic is working. So the next step I would then optimize it, saying like, oh, instead of $5, capping my take profit to $5 per ounce of gold traded, maybe I should implement something like a trailing stop. But the problem is, for a trader's confidence in a new strategy, if you happen to start the strategy and you are working with a high risk reward but low success rate, and your first 5, 6, 10 trades are losing trades, it puts a strain on your mind. At least this is how it is for me. But everybody's different. If you are more like, oh, I don't care, for me, risk reward is everything. For me, it's okay if I have 40% win rate as long as I earn 3 times or 4 times the amount of money that I'm risking. Everything okay. There are always many ways to go with this. Yeah, and the truth is really there can be anything. I know people also who have like a very low risk to reward but very high win rate, and they are very successful with what they are doing there. I want to load up here a new chart still. Don't know why I actually closed this chart. I think it's this one, if I'm not mistaken. No, it's not this one. It's always when you have too many charts, right? Too many layouts created already. But it doesn't really matter. I can just create quickly a new layout here for you. Because somebody, Syed, is asking about the moving averages that I'm using. And yeah, I'll tell you, I'm not going to share like all the details with it. Yeah, we're going to look at British pound also. Don't worry about the US dollar also in general. We still have over 1 hour to go here. So let's add a couple of moving averages here first. So the moving averages I like to use are, and this is not the correct one, sorry, I don't want simple moving averages, I want exponential moving averages, 1, 2, 3. And I want the first one, exponential moving average, I want a length of 200, which kind of is our baseline. I'm going to make this thick. The second one, which I'm going to put in red color, make that one a little bit thinner, is going to have a length of 50. And the third one is going to have a length of 21. I'm going to make this one yellow. Now, what I'm looking for, in my trading system in combination with price action are the angle. So the slope, the angle of these two moving averages in relation to the blue moving average, to the 200. If the angle is very shallow, like we saw here, for example, it's a shallow angle, this is an indication that there's not a lot of momentum. If the angle gets very steep, like we saw, for example, here, this means there's a good momentum to the downside in the market. So my trading system would look for price action on pullbacks to either the 21 or 50 moving average. So this would have been an entry, for example, about 2 hours ago at 9:05 in the system. It's a bit more complicated, but on a shallow level, this is what my system analyzes. The slope of this angle as a beginning thing. You can, for example, also trade the pullbacks on either the 21 moving average, so that it would have been here or here or here, for example. Here we broke through it with a stop loss underneath the 200 EMA. This works well if you restrict yourself really to stick to your risk management. So you don't, if you enter a trade here and you have your stop loss here, for example, you don't want to risk 5% or 10%. I personally risk 0.5%. Actually, this is also because of the 20K that are only available on the high stakes account. So if I trade this with a 100K account or 500 or even $1 million US, I would stick to something like 0.1% risk, because there's always the danger that the market gets choppy, things normalize again. We go in a sideways range, which is deadly for a trend following strategy. And then you are enter and get stopped out very often. This is actually because I want to make sure this doesn't happen too often. This is a good example here. A phase like this, where the price just oscillates around the 200 exponential moving average. I want to make sure to stay out of those phases. This is why I implemented this, the steepness of the angle of the 50 and 21 EMA in comparison to the 200 EMA. Like, for example, here you have a steep angle. So this indicates a lot of momentum. So these are then the pullbacks, like this one, you want to trade into the direction of a trend. It sounds very complicated. You can trade something like this manually as well. It takes, of course, a little bit practice. As I said, I've been working on this for 3 months. And so there are hundreds of hours of development time, obviously, that went into this. So be patient when you do something like this. Don't expect, like, as you could see, like, for example, on my equity curve on that account just now, it doesn't happen overnight. It's a learning process. It's like when you learn a new language. You also don't go to your language teacher and say, hey, show me a method how I can be fluent in German in 2 weeks. It's not going to happen, it's unless you're maybe a genius at learning languages. But even then, it's nothing happens. It takes time, it takes effort, it takes dedication as well. Let me quickly go through here some questions. So, can I buy with New Zealand bank, and later on, if I want to withdraw profits, can I withdraw an Indian bank account as well? Dinesh, it's best if you maybe write the support a message about this, and they for sure can help you with this, because I don't want to tell you things now when it comes to, especially, cross-border currency movements. I don't know how the regulation there is between New Zealand and India, for example. So do me a favor, send a message to our support, and then they will help you to answer your questions. Then we have, do you ever have dreams about trading where you are in positions but cannot close them? Surprisingly, I very rarely dream about trading, especially about scalping. I dream very often about, especially when I'm about to travel somewhere, about taking a plane, that I miss the plane or that I forget my luggage somewhere or my passport. But for whatever reason, I don't dream much about trading. Maybe because it's, like, at least the investing side, long-term investing, looking at charts, it's something I've been doing almost for 26 years now. So maybe it's something my subconscious doesn't need to process that much anymore. Whereas I'm traveling not that often, just a couple of times per per year there maybe. So here long trade on gold. I want to enter that one. Wait, where's my position sizer? Come on. It's here already. So let me just quickly do that with trade. Stop loss would be 3,320 on that one. Long position 0.5% and go for it. A little bit late in that trade, in my opinion, because I was talking, so I want to try to get and it's going up already nicely. 3,336.38 would be my 3,336.38. This might take profit on this one. So let's see. Judging by the momentum that gold has at the moment, there's a good chance to see how this trade develops. Either we get stop out and lose 0.5%, which is about time because all the last trades were successful with the strategy. But nice that we get to take a live trade here for that one. So what else? Yeah, that is interesting. I would take. Oh, you would buy yen. Yeah, that's the right direction for yen, in my opinion. What is that? I'm a scalper. Can I do 1560 trade in funded account? Yeah, you can, as long as you don't do like any high frequency trading operations, you can trade as much as you want. For sure, I have days also where I take like 20, 30 trades without a problem. What you cannot do is something like latency arbitrage, for example, where you open and close trades really by the milliseconds. Yes, there should always be some time between us. So, but yeah, that is definitely possible. Yeah, so for that trade, we'll see now how it develops. Let's have a quick look at the dollar. LJ and I were talking about this a lot, that we are not very positive about the dollar. Yeah, we've seen today we're looking at a bit of a stronger US dollar. Again, this is also why it's going up again now, actually, why we saw a little bit lower trading in euro dollar at the moment. But in general, the US dollar for me, since it's, if I really have to define it simply by chart analysis, I'm not talking now about here scalping something. I'm really talking about more long term. So the next 3 to 6 months, I think we're establishing ourselves between 100 in the US dollar index. Potentially could see something like attacking here the lows around 96. I always like to use Fibonacci retracements. I want to quickly see where the candle bodies are there, because I don't like to put the retracements on the wicks of candles. I think it makes more sense to put them at closing prices. So let me quickly see here, just that we are more precise on this. Yeah, this is funny. That works so well so often when we have a retracement back from a large move. So from this risk off move we saw really from 2021 to mid 2022, until inflation slowly started ticking down again. We are right now at the 61.8 retracement, Fibonacci retracement for this, and you can see we are having a hard time at the moment pulling through this immediately. However, for me, the potential really is more on the lower side. So I wouldn't be surprised to eventually, not tomorrow, not Friday, but over the course of really the next 3 or 4 months, to attack levels here down at 94, which in parallel then would mean we could see euro dollar attacking 120. So at levels that we the last time also had here in 2021. Really wouldn't be surprised in this. Somebody mentioned earlier here cable also. Yeah, we see this morning. Let's go here maybe to 4-hour chart. we see that the pound sterling was going a bit weak. I believe there was some kind of news. Didn't somebody mention? I saw somebody talking about it earlier. Yeah, there were job markets, right, today. So, right, unemployment rate was as expected. The forecast was 4.6%, and the real data was also 4.6%. Yeah, as a first move, of course, that puts a little bit pressure on cable or on the pound sterling. It wouldn't be, but long term, I don't think it will have much effect really. So when we see a weaker dollar, you're probably going to see cable also moving up again, parallel to what we are seeing in euro dollar. Those two charts are anyway very similar. Very often, you kind of see pound sterling versus dollar. Pound sterling versus dollar front running euro dollar a little bit. Sometimes that doesn't always happen. Let's see. As I said earlier, bullish, of course. And you saw I just entered a trade actually. Yeah, thank you. Exactly. But this is for a scalp trade. Yeah. And just, it's no financial advice, guys, please. When I do live trades here, same, of course, applies to my colleagues here. This is not an invitation to follow those trades. So it's something we like to do here because we want to show you, hey, we are actually traders. We're trading. We're not just talking about trading like so many other channels are out there. But please be aware of the fact that this is not an invitation to copy. The main goal for you always should be to come up with your own strategy. You can be inspired from all the stuff we are doing here. For example, from the Quasimodo structures that Victor likes to talk about, that Victor likes to trade or use as a structure to consider before entering positions, to slopes, to Jonathan's system, to all the other systems and trading styles that we have here. We have on purpose traders with many different backgrounds, with many different styles here. It's to inspire you to come up with your own system. Because if you just follow somebody, imagine now you say like, I want to follow every trade that Dirk does on the live streams. First of all, you can be unlucky that for whatever reason, these are just the trades where I end up losing money. And second of all, what are you going to do? And if in a couple of months down the road, I decide, hey, I don't want to do live streaming anymore. So then you're back to square one. It's better to take all of this advice, to get inspired and develop your own strategy with this. Yeah, highest unemployment. It was what was expected. So not that much of a surprise, but maybe the market expected a better one. The levels, the Fibonacci levels. So on the DXY, the ones I pointed out here, these are never levels where I say I need to trade on those. What I would like to look at now is always confluence. So what you could do now, for example, is you could say, down here, the market stalled a little bit. So it's for sure also a zone of resistance. We are or a zone of support, actually, since we're talking about DXY. So this one probably should be green. And then I would also add something like daily levels. So there's a nice indicator for this, key levels, Spaceman, Bitcoin. Why? I don't know why it's called Bitcoin, because it applies also very nicely for any other asset out there. And then I would, for example, say I want the daily open. I want to see Monday range. I want to see, all of this data. Then I would zoom in here a bit and look for levels of confluence. And a level of confluence, for example, would be really this area down here, previous month low, previous week low. We have the support, we have the Fibonacci retracement. So should you, for example, this is on a daily level, you could analyze this, of course, also, for example, on the 4-hour or 1-hour chart. should you, for example, then down here, a little bit lower than see like bullish price structure, be it a bullish engulfing candle, a shooting star or hammer or whatever they are called, that could be an indication then to, for example, buy the US dollar. So you would sell euro dollar, sell British pound versus US dollar, buy dollar yen, for example. This is always important, in my opinion, to look at these zones of confluence, especially if you are swing trading. But just an example, and these Fibonacci levels are always just another tool in your box to find these zones of confluence, to find the zones of resistance. It's never something to just solely rely on, I think. Well, this is all that I showed you the data just now. It's just 43 live trades at the moment. Of course, the back testing had hundreds of trades, and it's about so the result, the real trading result you saw earlier matches so far the back testing result, so that's a good thing. And the risk reward is not 1-to-1, it's below 1-to-1. That's why I say I need this high success rate in order to make this strategy profitable. I'm looking here parallel always at your questions. Somebody saying head shoulders. On what time frame are you seeing this? On the daily? Yeah, but this is not really. If you're talking about, I think we talked about this last week also about this. This is not a shoulders, head shoulders. This is, in my opinion, doesn't even fit the definition of a Quasimodo. I think it's like somebody, I think UK swing trader said that earlier. It's more like a triangle thing. Yeah, like something I'm very crudely drawing this now, like where we see either to the upside or downside a breakout. So very much like the structures we saw in the end of 2024 here, or in early 2000 or mid 2024 here. That looks more like it. But again, remember what I said in the beginning. There's always this thing of that we as human beings like to see patterns that are not really there, or we think patterns are more important than they actually are. This is a very good way to start, just support and demand. And if you combine this, for example, with price action, you have a very, very solid system. The problem is if you want to trade this on the very low time frames, I think it's difficult. Also, there's a lot of noise. If you trade this on higher time frames, like 1 hour, 4 hours, or daily, you very often get up that you maybe take one trade a week, or maybe even just 1 or 2 trades a month. From my experience, at least, might of course be different for you. And this is usually something beginner traders are not good with, like waiting until that perfect setup, that perfect price action setup around candlesticks is there. Just a moment. Sorry, I need to answer my wife. All right, sorry for that. Here we go. So, what else? Oh, what is that? My strategy was working until the last week. Is my strategy bad, or the markets are kind of bad? how long have you been using this strategy? How many trades did you do with the strategy? What were your stats with the strategy? I mean, even if you let's say you have a strategy that is successful in 90% of the times, which of course would be insane. But even if you have a strategy like this, if you look at, let's say, 10,000 trades, you're for sure going to have a period of time in there where your strategy is wrong 5, 10, 15, or maybe even 20 times in a row, even though that the chances of this happening are very slim, probably something like 0.05%. But over the course of many, many trades, 1,000 or 10,000 trades, this is prone to happen eventually. And I know this is something that can throw traders very quickly off the rails, and you very quickly come into this this momentum of doubting yourself, or think, oh, my strategy is wrong, I need to fix it now, I need to change something, when in reality it's just normal. It's just normal. I can only always say that always remember, like, what are the big guys out there doing in terms of expecting the profit. So if we look, for example, at the top performing hedge funds, sorry. If we look at the top performing hedge funds out there, then and top performing, I really mean the top 1% of all hedge funds. They usually have an annualized return of around 14 to 16% per year. That is over a period of 10, 20, 30 years. So if you have the expectation of, I want to do this every week, I want to earn 500% per month, I want to get my account funded within, I don't know, 3 weeks or whatever, the chances of you doing this are there, but they are very slim, and especially hard to repeat then. You might go through a period where you say, I'm going to risk more, than you get your account funded. But the question there is, can you keep up that rate? And I highly doubt that you can, honestly speaking, because it's statistically almost impossible. So if you aim at something like, I want to net earn 1% or maybe 2%, which is already high per month, then you're on the right track. Sorry to be the bearer of bad news. We are a bit kind of not spoiled. We are, let me put it like this. There are so many bad stories on social media, bad in a sense that that there are social media gurus telling people, with this strategy you can earn 1% per day. I made $1 million with a strategy, when in reality this is just not true. They don't show you reality, and this is where we try to be different. We try to show you really how the reality is. It's very, very important to manage your expectations. I'm scrolling here through. This is a good example of what I was just talking about. Sorry to take you here as an example. I know exactly what you're going through mentally at the moment. I'm a 100K funded trader, sustaining this account from the past 3 months, which is excellent already. So you are already farther than 98% of most other traders. Congratulations on that. Now I'm left only with $100 to breach my account. Is it possible to recover from here? It's always possible to recover, but it's going to be very difficult, obviously. If I had to guess, you probably, once you started going into a losing streak, you started risking more than you normally would have had, because you wanted to recover that account as fast as possible. And this is a trap, actually, that a lot of traders, myself included, by the way, in the beginning, stumble into. They say, like, oh, damn it, I've lost like $1,000 today. I'm down 5% or 2% or whatever. I want to get that money back with 1 or 2 trades now. And when I break even, I'm going to call it a day for now. It doesn't work like this. Stick to your system, stick to your rules. And if then still your account manages to breach the loss target, well, then either your strategy doesn't work or there's something wrong with your risk management. However, just if it's just over the course of, let's say, 1,000 trades, one of those drawdown periods that are always going to be there, then please do not change. It doesn't mean your strategy is wrong. Then the market is just at the moment in a condition that is not favorable for your strategy. Not every strategy works in every market. Drawdown periods are part of the game. Yeah, but it shows what is realistic. Don't you think they would find ways to have a higher? Of course, they are not trading one strategy with $1 billion US. Of course, that is not possible. Every strategy is just scalable to a certain amount of position size. But they do what you also should do. They are not risking everything in one strategy, in one style of trading. So why should you? I'm sorry to say, but I've never met a trader that consistently can get something like 20% per month or 50% or 100% a month. And I've seen, myself included, thousands of traders. It's just not possible. Because imagine also if that would be possible, then you, I mean, you would probably become a billionaire within just a couple of months, right? Even if you just do 1% a day, you're very quickly at a limit that is like insane numbers that are just not possible anymore. And this is exactly the way to do it. And I got it. It's so hard, once you are in this drawdown, you kind of start focusing very much on the mistakes you saw and you made, and the opportunities maybe that you lost, where you saw something like, oh man, I should have done this or that. In hindsight, I should have changed my strategy, adapt my strategy, and this is not the way you go. Stick to your strategy, stick to your risk management, because the problem is also if you change your strategy in between, all your data becomes worthless. All the data you've collected about your trading strategy becomes worthless, and all the risk metrics become worthless when you change somewhere in between the way you trade your strategy. Don't do it. It's the worst thing you can do, but it's so tempting to do that. I mean, when I started, not this gold account, so when I really started my first step as a trader 26 years ago, you wouldn't believe how many years it took me to finally understand this. So I was young, I was hungry, I had more hair back then, obviously, and so yeah, don't do that. Stay realistic. And thank you, Esmeralda. This is a very kind words. We try to keep it as realistic as possible for you here and not show you some overcolored fantasy world of trading. All righty. So, what is this here? So, what else? I super like this, Paul. Very nice metaphor. Consistent trading is like driving at 200 miles per hour. You have to make gentle steering adjustments left and right to stay on track. No impulsive steering, or you'll end up in the barriers. Exactly like this. And if you have driven 200 miles per hour, if you have driven 200 kilometers per hour also already, I think you know exactly what Paul is doing about. Couldn't have put it in better words. Really, absolutely true. Whenever I trade with smaller quantity, my win rate is 70 to 75%. When I increase my quantity, my trades always went into loss. This is a psychological thing. So somewhere along that way, when you change your position size, you somewhere have a mental barrier. And if I have to make an educated guess, then I would say that mental barrier is that you change into a position size or into an area of a possible loss that really would mean money for you already. So what do I mean about this? So for example, let's say you're trading on a 100K account. If you lose with a position $100 US, would that really make you angry, affect you? Probably not as much. But I'm not talking about evaluation accounts. I'm talking about real money now. If you would lose $1,000 in a position, so 1%, would that mentally affect you? Maybe already, if that $1,000 is an amount of money that could potentially, let's say, feed your family for a month or pay your rent or whatever, that you normally need as money to live month by month. And this number is very different for everybody. And the goal here is to, as you gain confidence in your trading strategy, to slowly increase that amount. So don't go from risking $50 to risking $500 immediately just because you saw the $50. Well, go from 50 to 75, then go to 100. This way you can slowly ease your mind into accepting that when you lose a trade, it's going to be a bigger number. Otherwise, you're just going to be focused on that number, and you maybe don't even recognize that you are panicking, but it leads to making decisions in risk management, going out of trades, not sticking to your stop losses, or early closing trades just because you see, oh my God, I'm losing $500 on this trade. I'm losing $1,000 on this trade right now. Later it becomes $2,000. So I could live a month of those $2,000. This is the kind of thing that, at least on a subconscious level, goes in. This is the kind of thing that goes on for me also. I know, of course, after a period of time, better how to control myself then, but still it's something that goes on. I saw somebody asking earlier also about how to measure your stop loss and then translate it into a stop loss, or also translate it into position size. There's one, if you're trading with the 5ers already, or as a matter of fact, if you're using a MetaTrader account. So this one, you can see my position down here as well. There's a tool called Position Sizer, which you can find if you Google, I think, positions calculator MT5. Yeah, if you Google position calculator MT5, and then you go on the first result, which should be from Earn Forex, there you can download this program called Position Sizer. It's something that Jonathan, for example, recommended to me. It's become one of my favorite tools when trading with my MetaTrader account, because it makes these things very easy. Because all I need to do here is, in the main window, be sure when you install it to activate up here algo trading, by the way, I need to choose what is my position direction at the moment. So it was long. Where's my stop loss? I set my stop loss is at 3,320, as you remember. Then how much do I want to risk? 0.5%. So it will automatically calculate my position size. So should I enter this trade right now, I would need to buy 0.12 lots to not lose more than 0.5% if my stop loss is reached. And then you go here on trading, and then you just need to click on trade. Also, if in the beginning there's a check mark here, ask for confirmation, then you'll get a pop-up asking, hey, do you really want to do this trade? There are many other things also that you can adjust within this. But for me, it's a super nice tool that takes this manual calculation of, if my stop loss is at that point, my stop loss is at 3,320, and I do not want to risk more than 0.5%, how high would my position size be? So markets are moving very fast. You can see how it took me a while to enter this trade, how I entered it in the top instead of entering a $1 or even $1.50 earlier. So this keeps you from going into that trap. Let me put it like this: really super tool, bread and butter nowadays for me. If I do, when I trade, and it's for free, by the way. So Google position calculator, what did I say earlier? Position calculator MT5, and then follow the earn forex links. Position sizer EA. It's a expert advisor on MetaTrader. There's also instructions how to install it, and it's when it comes to being able to execute your trades and be sure that you do not overtrade. It's really, in my opinion, the perfect tool for that. Yeah, I actually fear opening trades in live accounts. I super get where I can super relate to this. This is because this is exactly what I experienced for a very, very long time. My blood freezes in my veins, but I'm very profitable in the demo. I have read all psychological books. What can you advise? As I said, pardon me. I can relate very, very much to this because I had this. First of all, it's not only me and you having this. This is the majority of traders has exactly this. However, most of them, especially beginners, are not going to admit this because, we always just want to share the nice things. Oh, I won $500. I won 5,000. I earned $1 million last year. Nobody's asking about nobody likes to tell about the losses and especially the mental hurdles. I've seen a lot of demo millionaires, but I've not seen a lot of people that were able to translate this into real life trading. First of all, you need to accept there's always going to be a difference between demo trading and live trading, just because there's nothing on the line. And again, it counts here what I said earlier. When you the way to go for me, at least how I partially at least solved this problem for me, was that I started risking money that I don't want to say that doesn't mean anything to me. Even something like $50, that is money, especially in some parts of the world. This is like what people earn in a month. But, start with an amount of money that personally for you is something where you would be like, oh well, I lost that amount of money. Who cares? Maybe not who cares, but it doesn't affect you on a mental level that much. And then you slowly, when you get more confident, you see like, this is working. I'm having the same or almost the same results that I have on the demo account. Then you slowly get higher, because I can promise you, and we see that at the 5ers over and over again also, people that are doing very well during the evaluation phase suddenly struggle to make profit when they are live. Why? Because they think, oh, every trade that is positive now, I'm going to earn 70 to 100% profit share on that trade. And so they suddenly change their style of trading. They become hesitant. And also there I say, well, Rome wasn't built in one day. Why not just lower your risk until you feel more comfortable, and then you slowly get to a bigger position size? I think that's the only way of doing this. Like seeing people that have a mindset of that they don't care with a trade, if they lose $10 or lose $10,000, are very, very rare. That is like almost an autistic mindset you need to have there, which is, and I don't mean that in a bad thing, in a bad way. This is certainly a good mindset to have, or beneficial mindset to have when trading, but really slowly scale yourself up. Take yourself time. Always remember, you're not learning a new language within a day. So if you are managed to keep that account alive and grind up profits slowly within a year, you're already way ahead 99% of the other traders. And once you feel comfortable in doing that, nobody stops you from upping the account size, from going from $10 or $50 or $100 to $150 or $500. And if you notice like that, maybe you change from losing $50 to losing $100, and when you kind of are again where you notice like on a psychological level you freeze up, well then lower it again to $60 or go back to $50. We need our brain is really our subconsciousness is like a muscle that needs to be trained over and over again to get out of this comfort zone and accept a new reality. Well, I hope you didn't follow my trade, because that was my entry as well at I was at 31, so got a bit of a better entry than I did. Yeah, I mean, it's the stop loss is in place and the market is coming down, which is also normal for this time of a day to be a little bit sideways. Normally, I would only trade with strategy, by the way, between 8 a.m. and 12 p.m. But since I am in a trade still, we are going to see where it is. If that was a good entry or not, I cannot tell you. Time will tell. What do you recommend to identify deeper pullbacks? What maybe you could tell me what, in your opinion, is a deeper pullback? I hope the link doesn't get removed. I'm not sure if YouTube allows to post links. Yeah, that's very, very good. You are attached to the outcome of a trade, and that's what I meant with the part of losing the money is just one component of the difficulties of trade. The other component, and that still to this day is something I personally struggle with, is that we want to be right. I have that issue, especially with my long-term trades, because those long-term fundamental trades where I really invest for the next 3 to 5 years, there is, of course, a lot of research that goes into them. So naturally, I'm very biased by the end of my analysis, because I think like I'm found an edge here. I'm seeing something that probably nobody else is seeing at the moment. And if it doesn't become true, I'm angry at myself. I'm disappointed, and my self-confidence, I'm not going to say gets shattered, but gets a hit at least. And this happens in scalping too, because if we lose a trade, we need to admit towards ourselves that we were wrong. And that's a hard thing to do. You hear very often athletes, like at a pro level, also talking about this, that your biggest enemy to get from the status of a good amateur athlete to a pro athlete is this mental barrier of accepting that you're not perfect, that you're not the best, that you always can get better, that there are days where everything is going against you, there are days where you lose, which does not mean that your system is bad, which does not mean that you as a sportsman, if we stick with that metaphor, are bad. Yeah, Andrew, but this is something you can do with the 5ers, no? The 5ers is not going to, I mean, if you're trading evaluation counts, of course, this is a demo account anyway, but later if you reach the funded one, the 5ers are not going to place against you. It's an important topic, by the way. Ironically, I recorded this morning a video for a course on crypto trading where I talk exactly about the practices that some crypto brokers and forex brokers do that as well. Many forex brokers are actually profiting when you are losing money, because they have something called a B book, meaning they are on the opposing end of your position. So if you are long euro dollar, they are short euro dollar. So they have a natural interest that you lose the position, because that means they earn money. That is called a so-called B book. About 75% of all brokers out there do that. The 5ers don't do that, because the business model is geared, of course, towards us wanting you to be successful, because when you're going to be put onto the pool and the 5ers are going to profit whenever you are going to win a trade, because they are copying your trade then. But if you're not trading with the 5ers, you're trading with another forex broker out there, go for an ECN broker where you have very narrow spreads, but in return you pay a little commission, something normally around $4 to $8 for both position sides. So closing and opening position, you should be somewhere between $4 and $8. Some are 12, some are 15, some $20. But then you can at least be somewhat sure that the broker is not booking you. You can use, to my knowledge, a scalping bot, or expert advisor. In order to be sure, I also please contact our support, write a short email to the support, describe a little bit like what do you mean by scalping bot? Is it like a bot that trades like every 0.5 seconds? Or by scalping, do you mean, is it something that does like, I don't know, 30, 40, 50, 100 trades and holds them for a couple of minutes every day? The latter, for sure, it's going to be okay. But just so in general, the 5ers don't have any problem with trading with EAs, trading with bots. But just to make sure, please contact our support to get that green lighted, and then everything should be good, and have good luck. If you're successful with your bot, you should come on the show then and talk about it. Well, if maybe you can hear it by my heavy accent, I'm from Germany. Yeah, that's good. That one you can scale up to 4 million, no? Yeah, for sure. Before that happens, I would like to be out of a position, of course, as well. But I mean, at the moment, we live in times where at any moment we need to be prepared that Donald Trump is tweeting something that is going to affect the markets. We've seen so much volatility caused just by simple tweets of Donald Trump in the last months, and we are for sure going to see that in the upcoming 3.5 years, that at least we still are going to have them as the leader of the free world, so to say. And yeah, something you need to be prepared for in a term of how you can be prepared for it, because no price action, no indicator, no support and resistance are going to help you at the precise moment where that guy sends out a tweet. Market, if that is something like, oh, we are going to put 1,000% tariffs on China now because you didn't like something Xi Jinping said, then it's going to affect that market. And the only way you can be sure that it's not going to affect you too much is to really stick to your risk management. So if you're afraid of something like this, you might do something like, hey, instead of risking 1% or 0.5%, I only risk 0.1%. The main goal, especially in the beginning, is always to keep your account alive. Always to not come into that situation where you have like 2 trades or 3 trades destroying your account, or if you're trading in valuation account where you get into the vicinity of breaching your account, of losing that account. Well, we have soon an expert joining here on order blocks that for sure can say much more on order blocks than I can, which is going to be Victor, obviously. I can see him in the background. I don't know if he's just preparing or he's going to join us soon. He's nodding. So that is the gentleman that really is to be asked as the expert when it comes to order blocks. And yeah, thank you for the answer. It executes very quickly. As I said, share some information with the support, just to make sure you don't do anything that's like forbidden according to the terms and conditions. Otherwise, you spend money for nothing, right? First of all, welcome, Victor.
Thank you. Thank you.
How are you doing,
Dirk?
How are you doing, man?
Let me set my noise reduction. I was hearing myself How are you doing, and especially how is everyone doing watching us today? How is the crowd? How is the audience? How willing are they to become profitable if they aren't yet, Dirk? What have you gauged them in the chat?
We talked today a lot about trading psychology. We had a couple of questions of people going through what everybody probably has gone through. I at least not only once went through it, going from the demo phase or evaluation phase in our case to the funded phase, or if you're trading as an individual, when you risk your own money, when you are successful in demo trading and suddenly things do not work as well anymore, when you change to risking real money. And I was talking about strategies, how I handled myself, that for myself, to take things slow in the beginning, not risk amounts of money where you feel like, oh, that is substantial for me already. Scaling yourself. Thank you, UK swing trader. Scaling yourself up slowly and, take it easy and accept that Rome wasn't built in one day. Accept that you also don't learn a new language within 2 weeks, that things take time, but things over time, if you are willing to work on yourself, are going to develop into you becoming a good and quality trader.
Awesome. And I see in the chat that the audience is very appreciative of all the knowledge that you have been sharing with them today. I can only read the very good stuff from them, so they think highly of your session. It is, as always, it doesn't surprise me because that's how I know Dirk, being a source of great information, investment trading, and life in general. Dirk, I actually, if for those who came to the, and this is actually very comes from a very selfish place, for those who came to our stream right now, who did not have the chance to see, the discussion you already, everything you discussed. What are the, a summary, like a 2 minute, 1 minute, where should they put focus when there's a discrepancy between, when they, from back testing to demo, from demo to real, and from real to actually, larger capital, as you were saying. What are the key points of what you guys discussed today?
Well, the key points are mainly two. First of all, to accept that there's always going to be a difference between demo trading and real trading. I don't know any single case of a successful trader that hasn't at least a bit struggled with translating demo to real money. I said we see that a lot on the 5ers also. People pass evaluation phase and then they struggle at first a little bit to go on. Why is that the case? That's the case because you might be risking money that is substantial to you. I said, like, if you risk $500 in a trade, but maybe you're not, even on a subconscious level, you're thinking about, this amount of money could feed my family for a month. This is the amount of money that I usually use for rent or something like this. Then you are risking too much. So you need to start with an amount of money that, not going to say that doesn't mean anything to you, but that doesn't affect you financially so much, where you don't have that thinking like this, or, I could have done this or that with that money. And once you get used to that, once you feel comfortable, then you slowly up it. When you go, let's say, if that amount is $50, you go from 50 to 75, slowly up. And that way you're probably not able to go from risking 50 to risking, I'm exaggerating now, 10,000 per trade. No matter what the percentage now is, that doesn't matter. I'm just talking about the sole amount of money. That is what helped me. That is what made me accept also, especially on my long-term trades, that, sometimes, I will go into drawdown of a couple of 10,000. And it's important then not to panic. So you need to be able to leave your comfort zone, but also not too much. You also don't want to go from, that's like you're a decent amateur tennis player and suddenly you try to compete at Wimbledon. Of course, you're going to get smashed and probably not get a single point. And then you're going to be devastated. And it's with trading as well. If you go from I'm risking $50 to I'm risking $10,000, you're probably also going to get smashed. This is very rare that you can have a mindset of not being afraid at that moment of losing money. And
Basically,
of course,
you're saying
back testing.
Go ahead.
Sorry, that's the last part. But I assume now that the back testing process, the evaluation on real data of your strategy is already done.
Awesome. Yeah, I think you made some great points. What you're basically saying is that to let the volume grow organically on you, or grow with you organically, and not go in big steps, because that it'll make too much of an impression on you, because you're not accustomed to it yet. It makes a lot of sense, and that is very good advice there. Very good advice. How is the go ahead.
It's the last one, because Arma is writing this. I actually showed them the process of this on my high stakes evaluation account, where I said okay, this is where I started 3 months ago, and this is how my strategy over time has transformed to a place now where I feel more confident with my strategy, and it shows now also on the development of a capital curve, because I think for this trading gold on lower time frames, I'm going exactly through the same psychological hurdles that a lot of people that are watching us, not only today, but in general are watching us, are going through as well.
Yes, it makes a lot of sense, because it's a little bit new territory for you, which is what happens when you're new to trading, right? Yeah. You're not new to trading, but you're trading an asset that you're not accustomed to trade. That's not the usual, niche or area where you typically are active in trading. So it makes a lot of sense, and you're taking the same principles from your experience, where you are familiar with the asset, the strategy, and you're taking it with you to this new new situation, even though it's still trading. You're using the same platforms, I assume, but the circumstances are a bit different. I saw I had a little bit of a glitch. I don't know if it was me or if it was you, or maybe the platform.
We could still
but I think it's okay now.
No worries. I know we had
so it was me.
A lot of questions earlier on order blocks. We had somebody saying we have a head shoulders formation on gold on the daily charts at the moment, where I said I don't think it's really one. I also don't think it qualifies as what you would define as a Quasimodo. So I'm very sure we had people also I think stuck a bit in positions of cable, so pound sterling versus US dollar, which has seen a significant dollar strengthening in the early session, probably due to the unemployment data we saw this morning. So I'm very sure people would super love and appreciate to hear your opinion about cable. Although I know you are more trading usually in euro dollar, but I mean they are very much moving parallel to each other anyway, no?
I trade equally both of them. I trade EU and GU equally frequent. Wherever there is, I trade both of them at the same time. I trade whenever there's a signal. Even if there's both in them, I'll take both of them, both signals, and not sometimes, even if it's against each other. With my data, I know that it is okay to do so. I will have, of course, a heightened risk or correlation of those, so the drawdown will be a little bit higher, but that's the price that I take, that I pay for having more signals that I know in the long run they don't come at the same time. So I may have, and actually, to understand this a bit further, the reversals that I take are very low win rate. So let's say both of them will reverse, but one of them typically will will work and the other one will not. So I will take both of them, and sometimes both of them will lose, of course, and I'll have to just accept that. But I figured it out that it makes more sense to still use both of them. I will typically, I don't have a lot of overlap where I have both of those pairs opening trades and holding trades at the same time. And usually, even if that happens, it's okay. I built it in my risk setting, risk, settings, risk management. So it's yeah, it's fine. So all right, so let's Amal is asking for my ideas on pound dollar. How long, Dirk, how long are you with us today?
I'm still 15 minutes here. So, but
Okay.
please go ahead. My voice is getting a little bit coarse anyway.
I see. I just want to make sure that I know maybe you had something in mind to explain before.
No. I would appreciate, because we really had quite a number of people asking specifically about cable this morning.
Okay.
Due to that move that is a bit disattached from what we saw in euro dollar, in my opinion, caused by the drop and by the unemployment numbers we got this morning. But I think they really would appreciate your view on this.
Of course, and we can see that on the euro pound as well. That's one big, huge candle. That makes sense. All right, so yeah, sure. Let's look at the GU, the pound, the British pound, US dollar. I will do the online e-commerce. That's Kim, one of our regulars in our Discord. Says gold, please, quasi in the 30 minutes. Kim, I'll look very quickly to it, but we'll come back to GU to do the analysis. 30-minute. Let's look at what Kim is telling us. There's an opportunity according to Kim. Let's look at the. All right, so I do see a. Well, let me check. Where are we in the greater scheme of things? Okay, so we are in a bullish, and we're coming back to this after four candles, which is very nicely. So I'm looking for a reaction, basically either one of these sessions on this daily time frame. So I'm looking based on the building of the order flow, right? The building of those or creation of those order blocks on top of each other. Mitigating price coming back, mitigating each one of them. Well, not all of them, but two of them. We can assume that the most likely place to continue is to upside, right? It's also price is also making higher highs, higher lows, very, very nicely structurally bullish. Let's see if that is something we can find on the lower time frames. I'm gonna do this very quickly before we actually go in depth on GU. What I see is I don't see anything here yet within this daily. So that means that, and I do have a quasi here, but no entry order block in from the left. So it's maybe we can, for in this case, look at an H8. I think I was looking into an H8 on this pair, and we don't have a quasi either. So basically, it's left. It leaves us with very little to play with. The H8 didn't help us. The H4, as I said, doesn't tell us anything anywhere where it is likely to continue to, where the market is telling us it's not creating any order blocks here. So let's go to the lower time frames. All right, so I do see on the 1 hour, I do see a let's see, a quasi on the hourly for a possible. I don't like the fact that it's from a daily to a hourly. That's a weak alignment in the sense that it doesn't connect as well. So I don't. If there's a trade here, I'm not gonna connect it to a daily unless I'm not gonna hold it overnight unless there is, in the process of the trade being open, more indication on the H2 and on the H4. But that's not the case. We can still take the trade. I don't see any order blocks here. But then again, that is just my specific rules. I do see that reversal coming in, and it has a very good reaction. Obviously, that move already happened. But on the 30-minute, and I think this is what Kim was talking about. Let's see, we do have one order block here, which obviously has been negated already. This is the low. The low is 312.08, 09, I mean, and there isn't anything here. Okay, so this is one that has been taken out. I still mark them, even though it's been invalidated. It's to let me know how many have been created. If there's too many created, then we can discard the whole time frame or the whole structure on that time frame. We did have it depends on your exact rules. Personally, if this happens to me, right here, and you can check multiple price feed to see if this happens on every price feed, but I'm not going to do that because we're going to go to GU. But as you can see, it closed below it, meaning in my book, this structure or this structure has been invalidated. But it doesn't have to be the case. You can have it with a little bit of margin for error or checking other price feeds. And it's still, as you can see, it was still very precise or very accurate in indicating where price was likely to reverse. And price did reverse there. And if you, the entry could have been when price comes back to retest that order block, and probably either on that wick or on price coming much deeper, you put your stop either below this or below that low, which is the head, and you target this high to begin with, or some structure you see here to the left, in depending on everything else, like how many confluences you have for the trade. It's a very nice one, Kim. Thank you for that suggestion. It doesn't have the alignment to be a huge trade, but still, I mean, if this has let's assume you waited on, let's say we took a long here, let's say when price reversed, that's without using lower time frames, putting your stop below there and targeting the first order block, not the last one, which can still, I think, still has a good chance of being reached, which is this one. And just targeting the first order block here, it would have been a 2.4, 1 to 2.4, which is very nice. And it would have been in just 3 candles. That's if you took the, as when it closed above the first bullish. One very simple rule could be the first bullish candle that closes above the structure, right? That's just one idea, one suggestion. You have to find out what works for you. But that's a very simple way, and that would have been a very nice structure. I personally believe that it should reach that. That would be almost 1 to 4. Awesome. I like that reversal. Shubham, I am from a unknown country, undisclosed location. I'm just kidding.
He comes from planet Mars.
All right, so let's continue. We go with the that's gold. We can come back to gold for some in-depth analysis later on as time permits. But let's go to GU. As I understood, you guys have been very adamant in getting some information about that, or at least some analysis on our stream, which is one of the reasons we have these streams, is to share our views, not to be taken literally or to be followed as signals, but to be something you can test your own ideas. Have perhaps we might point something out that you haven't seen, or maybe you completely disagree, and that's fine. But it's always good and healthy to have multiple views, as in as in a democracy, it's always better to have multiple views and have everyone be able to choose whatever resonates better with them. We're not here to discuss political science. Let's get to price action on the monthly time frame. What do we see? Very simple. I'm not going to spend a lot of time. We do have a quasi on the monthly. The monthly quasi is not indicated, but it is right here. That's the according to my rules, that's my neckline. There is a long-term downtrend, so you need to this bearish reversal is in line with that super high long-term downtrend that we see. So that makes it a good, always when you're taking a reversal at the end of a counter trend move, which this could be in the direction of the primary trend, it's always a great position to be in, because if you're right, you can serve or take the trade for a very, very long, especially if this is the monthly, right? We're gonna spend a lot of time here. We do have that impulsive move or that established uptrend break, and we come back to one of the, let's see how many we have. Is this a actual quasi? One here, and we do have two which are not together. Yes, they are. So they're counted as one. So that means we can drag them like so. So we are currently in a very wide, not very exciting, I know it's on the monthly time frame, but just to understand things on the lower time frame, even on the weekly and the daily, to understand where are we on the monthly. So on the monthly time frame, we are in a place where we should see some supply, right? This is a supply area, so we should see some supply coming in, and price have some difficulty continuing higher, or maybe even reverse completely. All right, so that's the only thing. There's no signal to be ahead about on that fact, on that structure. All right, so let's look at. We have this is the weekly time frame, of course. All right, so the market from the weekly time frame, very similar to
take profit in gold reached, by the way, guys.
Nice. What was the
what a long scalp trade.
Awesome.
So based on my,
what was it based on? Your indicators, right? Your proprietary indicators, yes. Your very top secret CIA, NSA.
Exactly. The one, if you find anything out about them where I would need to send a hitman to kill you, basically. Yeah.
All right. So we did break out of that previous high in the weekly time frame, and you can see how quickly, how nicely, this is something we saw on EU as well. We can compare them actually in a couple of seconds. You can see how nicely it breaks. It not only breaks, but it closes firmly above it, and it comes back into retest, confirming that breakout, right? Leaving that wick, and then continue. And we can still have a, on different, it doesn't matter what time frame, it can still have some retest in the future, but this looks very solidly bullish on its way up. There isn't any new order block that was created. The only one we have is a weekly below us, but it's not relevant right now. And just to compare how this looks on EU, we can see that EU had a little bit of a more trouble after breaking out. You can see that the candle, the close wasn't as high as was the case with GU, and it had a little bit more difficulty holding that breakout of a previous high. Of course, EU is breaking of something that is, let's see, which is not the same level, right? A high of not September 2024, but in this case, EU was breaking from July 2023. Nonetheless, it had some more difficulty holding that level. So that tells me if you're a trend follower, GU is much more bullish on that time frame in any case. Getting closer by, there isn't anything that tells us, any trade to be made here, right? There's no fresh order block. The one that I just mentioned, that is not relevant right now. We're not there. What we do see is this, and this is interesting. We have a daily quasi, right? So it's an inverse, in this case, an inverse quasi in a very bullish weekly trend, right? See that alignment? It tells us that we could have in the future some retracement that would be, and the reversal could be that continuation for that longer term weekly time frame. So let's mark this as the daily quasi. You can see we have this nice established downtrend. There we go. And let's see where structures would be interesting to do so. Let's see. We have this one is all right. So all of these, basically the daily, it doesn't give us anything to define. There is a quasi, but it's too wide. It's so wide, it's even wider than the weekly. That tells me that it's not great for a signal. I will have to build some more on this time frame. So if I want to take it using this is something for maybe in a couple of weeks if it comes back, but it comes back to the weekly. And I want to take a signal on the daily. I need more confidence, because this is not refining the weekly, right? The daily should be narrower. It's not. So that means that it has alignment, but it has a weak alignment, telling me that I need more confidence. I need to be more selective. But that's the only entry order block. Actually, we can mark it as such. But it's not something that we can that's not actionable for this for today, and probably not for this week, although we don't know what is in store for the rest of this week. We're only starting. It's Tuesday. Let's see, what do we have? We have a retest, a very beautiful retest. Look at that. I cannot make it any more beautiful. Look at that. I've tested this before. When we have a small body candle like this, I don't I like to check them on multiple price feed, but it could be just a little deviation. And as you can see on all the price feed that I use, all of them indicate that it is present, so I will use it in my analysis. So we had a first indication. I wouldn't trade the second time it comes there, because as you know, the second retest is not as good as the first one. You can still use it, you can still trade it, but I prefer not to do so. In this, as we can see, we have, let's mark this. We have two order blocks on top of each other. The first one is still valid, but we can clearly see it is not the one likely to be. If price is going to reverse, that wick already tells us this one is not a great one. Actually, I'm going to take it away. So we are in a order block that is being retested on the 6th. Is this 6th? Yes, on the 6th candle since its creation, which is still fresh. So let's see if we can catch something as a reversal, a bullish reversal, or an inverse quasi for the continuation. Although that candle is very daunting, is very scary to do anything about it, or to enter long. But it's okay. It's if you know what you're doing, and you have the data to back you up, you shouldn't be scared by these candles. All right, so we have the daily here. We're right there. And on the 4-hour, let's see if we have a quasi that could support our case to go for a long. The head would be this, but I don't see the quasi. In that case, I don't have a quasi on this time frame. The head would be this, but this is not defined very well as a established downtrend. It's just one move So in this time frame, I'm not going to score this as a quasi, consider it as quasi. So that means that I cannot use anything from this point as a quasi. Anything else? This could be one. However, we already see that it's not relevant. It's not only relevant, it's been invalidated already. So that means that that also is not something we want to be using. You can't use it anymore. That leaves us with basically nothing. So there's on the daily, on the H4, there isn't a reason. I don't have a reason to look for a long. And even though we are in a daily order block, and I expect some kind of a push based on this structure, it probably will only be a push, a pop, and not really a complete reversal, right? So that's my reading on it, because of typically, if the market is going to reverse, not always, but it will show some kind of reversal. It will show a quasi of some kind, even if it doesn't fit my rules. It will still be there, like almost fitting my rules. But here, there isn't anything I can identify as a quasi. So I would just not trade it. To me, that's a sign that the market is likely not to reverse and perhaps needs to go a little bit further down. Let's see on anything else. Actually, before we continue, let's look at the ATR for today, because that looks like a very large candle. Do we still have something? It's the ATR on GU is 82, and the market has already done 108. All right, so that's for anyone trying to short this, be aware that that pair has gone already, and it's of course the numbers that came out this morning. I understand that, so that's why it hasn't extended the range or expanded range for today. I would be very careful for a continuation right away today, since the ATR does not support that, or it makes it less likely. But surely sometime, like after a push up and you see a reversal, bearish again here, right? Well, wherever that may happen, we don't know where exactly that's going to happen. I could, see price continue for lower levels later on. Perhaps not today, as I said, but maybe tomorrow or the day after. The H4, I don't see anything, as I said. And let's see if we have something else. Let's see, what else do we have?
And guys, please remember, leave a like. I see we are closing in on 100 likes now, slowly. But we're not quite there yet. Where are we? 92. Give me 8 likes.
100 likes.
8 likes, and then you're going to get rid of me.
We can do better.
We can do better than that. That's true.
We can surely do better than that. Come on, guys. Show us your clicking ability.
Show us your clicking ability. Remember what you got. You got a super good analysis just now of gold, of cable. You had a live trade today. So what else can you ask for? My God, if that is not worth the like button, I don't know what is worth it.
All right, so we do have on a lower time frame. As I said, from a daily to the H2, that's too big of a step. So I'm not going to connect them to. But we could see, I'm still looking for a possible long here, even though the H4 doesn't tell us that's likely to happen. So we had one.
All right, 115 likes now. Thanks, guys. Appreciate it.
Awesome.
But keep on pressing that like button.
We have LJ in the background as well. Always good to see LJ.
The Australian legend.
Yes.
The trader down under.
Down under, indeed.
Down under whom?
That was
a cheap joke. Sorry.
I didn't get it, but that's fine. Maybe some
Yeah,
everyone
that was
else in the audience.
lost in translation. One of those jokes
Okay.
I want to make that is like directly translated from German to English.
I see. Yeah, I'm trying to look for a long here because I do like the fact that I do appreciate, or I do see that the it may be overdone, that this move, but is it enough? Is it enough? Are we already in there? I would expect, for this fade trade, either I would do this on a very low time frame, like the 1, 2, 3, to get in with a very small risk for that pop on a quasi on the lower time frame, that low time frame, or I would wait for maybe the end of London, because naturally you will see the volume going back. We will have the mean reversion move and things like that. So I'm interested in seeing LJ. I'm interested in seeing LJ. Yes. How are you doing, LJ?
We are
How
all
we going?
interested
Doing well.
in
How we doing,
seeing
guys?
LJ.
How are you doing?
Doing all right. Doing all right. I hate the price action today, to be honest.
You
You
do?
Really?
On
On
what pair,
cable
or all of
or-
them?
On a bit of everything. I mean, I caught part of the rise on euro dollar up earlier. I initially looked to short about 114 just for a bit of a scalp. I got stopped out on that, flip long. But yeah, just in general, I don't know. I don't like it across the board today, to be honest.
I see.
Yeah.
This kind of movement is very difficult to catch as a reversal, because you can see how this wouldn't trigger me into a long, even on the lower time frame. This is the 1 minute, and you can see how very aggressively this is being sold off. This has been sold off, and in order for me to be triggered, I need some kind of structures before, like a left shoulder. Like a left shoulder is actually a failed head, right? You don't call it a head because it failed and created, it becomes the structure, but we don't see that here. There's one little pop here, but in general, you can see that it's it just one push down, and then it grinds up again, right? I wouldn't be triggered easily on a setup like this, even if I were to apply my quasis, my neckline. That would give me way too late of a break of structure signal, right? I need something in here to get in with something very tight in order to for it to make sense to me, because I know the likelihood of this trade, you actually catching sort of a falling knife is very, very low. It's something you need to do with low risk, because it has a low win rate. And by the time it breaks this, it already has moved away very far away for a 1 minute. Let's measure it. It's already 30 pips away. That's way too much. I wouldn't be taking a quasi from that. So I wouldn't be taking a long, even though I would expect prices going a little bit higher. If anything, that wick could have been a little scalp long. Maybe we can mark that and see.
Yeah, I'm ultimately looking at shorts on pound dollar after this little bit of retracement at the minute.
Okay.
Gentlemen, I'm going to get some lunch, and I'm going to hand over to you guys. Thanks, Victor, for I think joining it a little bit earlier today. And you guys have a safe one. Not only our host, but everybody watching, of course, also. And yeah, see you again latest next week, Monday, possibly a little bit sooner than that.
Absolutely.
Thank you, Dirk.
Ciao, man.
One question here: why do I have 3 different pound dollar and 3 different euro dollar? The fact is that I use the open, the high, the low, and the close for my signals, and I need to be sure that it's visible on multiple price feeds, because let's say one of the rules tells me that it needs to be a bullish candle or a bearish candle, and it has a very small body. It could be just the fluctuation of the market that on my price feed it shows as a bullish, but not on majority of other price feeds. So it's a little poll that I do on other to see if the same candles and open and highs and all those data, OHLC data, are the same. And then it's just in borderline cases that I use them, but I typically don't have to use them very often, but I still have them there for ease of use so that I can double check them very quickly. All right, so I would have this would have been something that's the wick on that hourly when it came back to retest. That could have been something, but I don't know if I would have traded it easily. There isn't really a pattern there that even on the 1 minute, there's not enough confluence. Also looking to the left, there isn't a lot. It wouldn't have triggered me to do anything on that. But that's the only place where I would have been looking. Maybe here, so right. You have actually this would be how I trade discretionary, like outside of my very fixed main strategy. Just looking at the H1, which is this shaded area. And we have one candle, it comes in and you have an outside bar. You guys see that? It's an outside bar telling us that something changed, and it's very significant because you only have big bars coming, big bearish bars into the structure. Let me mark this. Like so, you have outside bar here, another outside bar, and then it switches. All of these are bullish, bearish, and then switches quickly. It has its initial push, and then right on front of that upper border of that order block, it creates it switches again, telling us that whatever that was hit here in terms of volume and order flow is something significant, because it has followed through with another order block being created, and you could, in principle, get a trade there, put your stop somewhere below, and then target something that makes sense on the higher time frame. Let's say something this high or something like that. And it probably, yes, it already would have been hit. That would be something that makes sense to me, but that's very flimsy in terms of arguments to be held. So that's my look on GU. There isn't a lot I can share with. There isn't any structures on the H4. The market did already its daily range and even exceeded it by about 20%, even a little more than 20%. So I would say either I wouldn't be taking anything here. If anything, we can look for perhaps a short possible for tomorrow, because we do have 2 order blocks on the short side, which we might get some retest in the coming sessions. All right, so let's
UK swing, yeah. The glasses are just for fun. They're not real. They don't have anything in them. They're just my play glasses. We were going on about it on ABL. Paying out Henry. He needs to go to Specsavers. So yeah, it's just a running joke today. But yeah,
all right. So we do have 20/20 vision, no glasses.
yeah.
All right, so we have we do have a quasi. The neckline is at least here. Yeah, I wouldn't put it anywhere higher. This is something for those who think that the market is tapping out temporarily. That would be the daily neckline, right? So we do have an established uptrend. Although it did make a higher high, so I would be very careful not to short this for very long. But still, it's let's mark it. The daily.
Yeah, I think ultimately I want to go short pound dollar at some point. I think there's some lower levels to take. I just don't like kind of the positioning where we are today on a number of pieces. I guess not much news on the cards today. A bit lower liquidity kind of thing. Sort of just push and pull of flows. We got, CPI, and there's a bond auction this week as well. So I think waiting for a few cues from that, plus obviously the China talks, and then same with the Europe stuff as far as the tariff deadlines and that kind of thing. I would be curious, though, Victor, what you're seeing on dollar yen as well. If you want to,
okay, we can take a look at that
later once you're done. Yeah,
I have a there is an entry order block. There is a quasi. It is visible on. It's not a daily. It's an H4. There is. Let me mark this correctly. So there is. We did find. It's very broadly. It's not something very attractive from the first sight, but we did have at the end of this impulsive move, we did create the order block on the daily, and we came back the second time on the retest. Even though it did squeeze a little bit, it created 2 order blocks, telling us that even though, yes, we are in a bullish market, the sellers are really stepping in, right? So that tells us that price could easily or more likely hit some structures below before continuing, right? So that understanding that what phase we are, and who is in the interim having the overhand. So we do have that structure, those 2 structures. And on the H4, it does create, there is multiple overlaps of order blocks. So I have the fact that it's quite large, I don't like, but I would be looking for a short in here. If price could come back, maybe tomorrow and do something similar to this, then I think we could have a nice move down to perhaps this order block, or perhaps even lower. That would be something that makes sense. The long from here hasn't developed yet. So I would, any pop, any move, any rise in price on GU, I would consider just a retrace, on a downtrend. This downtrend, this new downtrend that was created here. Right, so anything that pumps out would be an opportunity to sell to lower prices. Anemic. That's a nice way to putting it. Swing trader.
It is a bit anemic, hey.
All right, so let's. You want us to see the dollar yen you mentioned, right?
Dollar yen, yeah.
Let's take a look at that. How was your trading day yesterday, LJ?
Yeah, yesterday was good. I left a couple of trades in on my hypergrowth account though. When I went to make food, accidentally, okay. I closed out everything else. I thought I'd close them out as well, but no. So I came back with a bit of a red number after being in profit, and that's like, gosh darn it. But still ended up the day well. So yeah, yesterday was pretty good.
Right. So on the higher time frames, what I see is that even though we are getting back into a fairly fresh, this is only 4-6 candles from its creation, fairly fresh order block. The ensuing candles do not, tell us that the market is really, that the buyers are coming to the market, to the swinging plate or home base plate. So it tells us that I would expect some buyers coming in. It's not happening. So that's something. It still looks quite weak, even though we are in a demand era. That's the only thing I read from that. Other than that, we do have a bearish reversal above us, but currently in here, there isn't anything on the weekly time frame. There is this fresh order block that has already been retested on the weekly. Right there. So that tells me we're in the middle, kind of in the middle of the range from these 2 points, which is not a great place to be in on a swing trade. In terms of a swing trade, right? You want to be closer to one, right in the middle of that range. So it's a little bit difficult to read, and there isn't anything here on the weekly. There are structures here, but not part of any order blocks or any quasis. And on the daily time frame, let's look at that. Let's see if that happened. Information. a pair I don't typically analyze, but we can see if there's something. 1, 2.
How's it now, Henry? Sorry, Victor.
No problem. Good thing you put some music.
Just trying to get the volume right.
The volume is, I don't know. I sometimes think it should be around 8 or 9, but sometimes I see everyone putting it at 15. So maybe it should be at 15. I'm not sure.
Yeah, that's what I was wondering, because it was at like 50 before. And I was like, surely that's too loud.
50?
Yeah, I think that's sitting on 50. I was like, no way. Yeah.
No, it should be around 10. I put a person around 8, but I don't know. Maybe
I just put it
it's
9 now, so hopefully
9. 9 is what I.
Yeah, okay. Henry says it's good now, so yeah.
Okay. Yes, what I would say is we are in a very interesting place on a daily, but we don't have anything on the weekly. That's a little bit disconcerting because I don't want to be using a monthly structure with a daily, alignment if I don't have a weekly. The weekly isn't there. I don't see it. Nope, I don't. If I have to make a lot of effort to see it, then it's not good. So there is a daily order block here. We did not get anything. Well, we did have a very nice outside bar here. Okay, so this looks interesting now. So that could be a place where a daily signal could be considered a daily signal. If that is true, then we should be. But obviously, the market already moved from that position. So I would be. Actually, this looks interesting as a long.
Yeah, that's what I was thinking, because basically I went long off that exact block yesterday.
Okay.
We highlighted that in APL and stuff as well.
Okay.
And then we pulled back, just a touch earlier, and then sort of ran back up again. So, it's looking as though we still want to move a bit further higher. Part of that was spurred by some of the comments from Japanese finance ministry today. Overall, structurally, fundamentally, that kind of thing, the path is lower for dollar yen and dollar in general. But it seems as though, I'm wondering if we get a bit of a pause in this and a bit further upside. It's kind of, especially if you go down to the 15-minute, it looks as though we are kind of finding like a sort of bit of a perch in here to possibly have another run higher.
I think it's in the middle of that range, which is not clear to me yet. Let me see on the H4 what we have. Do we have a quasi here? We do. Is it a valid quasi? Let's see. We got 1, 2, 3. No, it's not a valid quasi, so it's too big of a quasi, too big of a structure to be considered. Maybe we can find something in here before we go to the 15-minute. This is looking very, very nice. Okay. Apparently, I did look at this sometime in the past. All right, so let's mark this. I would consider that then the entry or the quasi. Of course, it already came back and had a very nice reaction. We had two areas to get in. But the question is, what direction would it take from now on? Let's mark this. All right.
Yeah, intraday, we seem to be in an interesting spot. Like I was saying earlier, most of the charts today, I'm not really a big fan of in general in the price action, but dollar yen is looking curious, at least I'll say that.
Yeah, I would say I would be still interested in taking something after it reacts to this area in between these two order blocks. I think it's still tricky to take a long, at least on this time frame. We did have a very nice follow through after the second retest of that entry order block on the H4, which tells me it's a great great thing, but it's, to me, the opportunity was down there. Yeah. Currently, what I see is, we're getting back to those supply area on a daily, and the market is reacting to it, as you can see, and the second time around. So I would say it's, I would need some more information whether it takes out this order block or it comes back to this bullish structure for me to think along here. Because I think the downside risk is a bit still present, at least for me. If anything, I think I would be taking a short.
Yeah, I'm net structurally short, but I just don't know if it's ready to go just yet,
Yeah, I see the break and retest very beautifully here.
Like, have a look at the 15-minute structure, like, for the session.
Right, this is what I mean. That break, and then break and it's a break and then a retest, and it moves away. So on this, that looks quite nice. Let's see the 15-minute.
Like I said, very anemic, but it looks as though, as far as like intraday, we might get a bit of a run there.
Well, what's
basically the point of what I'm saying is I like the price action today. I feel like is pretty lame, So
135, and we've done today's. Let's see how much. 89. So that leaves us with 45 roughly. The question is on which side will it come, even if it will, because of the anemia we're experiencing. All right, so these moves, which this happened in the Asian session, and this one was in New York, pre-New York. They are still, I would say, I can understand on the 15-minute along from here. If I were to look for a structure, let's see if there's something good we can, that couldn't we maybe even take a trade online. I do live. I think on the higher time frame, I wouldn't want to be long from this area because of the supply area.
No.
But for intraday, I think you're very right that it does look, it has like that possible continuation or follow through even after hitting that supply area. Let's see if there's something we can use. Maybe on the 1 hour. I don't see it. All right, so there's this order block which has been retested. It is the second retest already, so I don't like that. But the first retest would have been something on the 30 minutes perhaps. All right, I see this as an entry and these possible entries as well, but it already rejected it, or actually already reacted from it. Yeah, I can see myself taking a trade from these areas. You do have some alignment, the H4, the H1, 30 minutes, and on the 15 minutes, I'm sure I can find some structure to define the risk. 1, 2, sure, yeah. I think that's a great area. If price were to come a little bit lower, even perhaps on this order block, that could be something of interest to me. Intraday, I would take this.
Intraday, because that's what I'm saying. Like, as far as anything else, like I'm struggling to see much that's like at all decent. Maybe you could fade the euro dollar rally that we've had now. Just for like 10-15 points or something. But again, it's all kind of small movement. Same with pound dollar, something like that. But I'm not seeing heaps.
What's this news about? Do we this move? I mean,
was this about just now or? or just the move up in general?
I mean, this move was from beginning of London.
Yeah, that was just spurred by the pound falling out of bed as well.
Okay.
So just the natural correlate with the dollar side of things. Euro dollar often get pulled with the pound. Similar trading partners to a degree and all that kind of thing. So when you get one thing happening in one economy, there is some information you can bear to the wider block to some degree. And then it's just driven up further. We had the whole Euro complex ride right up, Euro pound up, Euro yen up. So just in general, the Euro, absent any other news, it's all just flows driven today by and large. It seems just buyers and sellers chalking it out. So we're seeing Euro dollar run a good bit higher now.
I do like. Go ahead. I'm sorry to interrupt you. I do like this as a short.
That's basically what I'm saying. That's about all from today. Like I said, the other parts are like people still waiting on any of this kind of trade news and stuff coming through. But as far as where we've come up to now, I do favor shorting this, at least just for, again, small intraday kind of next hour or so, 2 hours, something kind of trade.
I can see your point, LJ. I would depending on how it closes in 8 minutes, I would be interested in taking a short from here. There's nothing, it has an H4 and it does have an H2, which is enough for me to go to the lower time frames, and I would be able to catch maybe something on the 5, but even the 15, which I don't typically use, even the 15 minute gives me a structure, and you can even consider this a second right shoulder, meaning this would be the first, the head. Both of them are valid to be taken. Even if we take that, it doesn't change anything. We can still, it will be the same. We'll have this as an overlap, and this will be the structure at hand. So I think this would be a nice trade. What I would do is I would look for the reversal on either take it from the 15 minute, and in that case I would put my stop either above the potential new right shoulder to be created, or above the whole structure. But because the greater picture isn't as nice as clear as I would want.
No, it's not. All of it's very messy. Hey?
Yeah. It's about I don't like the fact that how it's looking. The fact as well, we had a very nice structure here, which had very good follow through, but afterwards this is not typical, right? All this movement back to basically the daily order block, and almost another one tells us that the market isn't ready for good follow through movement yet. And I don't know what that means, to be fair, but I would be looking for longs from when price comes back to these structures. But it's the more times it does it, the likely the weaker it looks. In the meantime, I would be easily able to take something like this on the, I would say on the, something like this. I would say something similar to the, there you go, something like that would make a lot of sense to me. Like the first structure on a relevant time frame, but only if it closes on this time frame as either an engulfing or something, or maybe on the lower time frame, it tells us that there is an actual quasi being created here. And let's see if we have that on the 5 minute. Actually, I'm gonna take a break. I forgot about the time, lost the notion of time. We have, let's see, this would be obviously the head. Yeah, that's too big of a structure. I would wait for this to be broken first on the 5 minute, just to be sure that there is a breakout structure. This would be the head. For those wondering, the head, the left shoulder, and we want this to be broken first and then come back for our entry. So it'd be something like so. And if this does happen, then it means that I would want to be entering short when it comes back to either this one.
We got the boys waiting in the back. You got the team here
we
as
do.
well.
Oh,
yeah.
Yes, I haven't seen them. Thanks for letting me know. I would have let them waiting for another 20 minutes without knowing. All right, so that's what I see on EU. I think that's a possible a trade for at least next couple of minutes. That's enough. That's not enough. That's what what I can share right now. I'll be back in about 1 hour. Actually less. In the meantime, Mike, you're free to put the go ahead. See you guys in a bit.
Alrighty. See you, Victor. We'll see you again. Ciao, man.
Bye.
Well, hey.
Crew, how we going? Oh, it's just me. Yes.
How you doing, fellas?
How you doing, Griff?
Yeah, all good. Good to see you both. Good to see you both.
How you doing, mate?
No trades before you ask.
I was going to ask you getting any sleep, mate, but you know that's.
Oh yeah, none of that. None of that.
No
sleep, no trades.
No sleep, no trades, man.
Yeah.
Wow. Okay.
You'd hope they'd be inversely correlated, right?
You've got 50% there of what LJ does. LJ's not getting any sleep, but he's getting the trades. So
yeah, all the trades and no sleep. That's it. Yeah.
You're halfway there.
We need to like blend, like merge somehow, like I don't know, like Dragon Ball Z when they do fusion or something, and then we'll get the best of both worlds. Or, you know, yeah, exactly.
Oh dear, good stuff. Good to see you, Griff. No trades, but I no doubt you've been a busy man, I'm sure. Looking for trades and
definitely
restraining yourself. So we'll no doubt take a look at that. But let's have a look. I'm just quickly looking at gold at the moment, actually. I know this is a popular one for everybody. Here's my least favorite fan. It's Maria. Good to see you, Maria. Yeah, I'm not going to let that one go.
Hello.
The boys are back. That's right. Day before CPI, too much confusion.
Yes.
Yeah, you're damn right there, mate. You're damn right. I am confident that we could possibly see some sells coming in for gold today, and we're coming into a nice little area actually at the moment. So we're in it right now. In fact, I kind of like it for this area here. So I'm going to be looking for opportunities further down on lower time frames. I've already broken this structure here, so I just want to see if I can find anything of great interest. It's a little bit too high up, if I'm honest, those ones. Let's see if we can find something on maybe the 11 minute. Yeah, nothing of super interest really. I was hoping to find something, but I mean, realistically speaking, it could be in here. It could be in here.
Yeah, I think we'll get sort of 45 before I'd sort of consider it on gold.
Yeah.
From what I'm seeing.
Because there isn't really anything at all, if I'm honest, actually. I was expecting to be more in this zone, but it seems that
yeah, we're a little bit
maybe a bit premature, but we are coming into a nice interesting zone. So I'll be looking at gold on the lower time frames just to see if we have anything of interest. I mean, this here actually, in fairness, this one here looks nice. And the reason for that is that it's it's taken the previous high of the body, which can very often be a nice little area, and we've got this nice collection of wicks in here. So that might be a nice one to look for reactions from. So I'm going to drill down into the 1 minute. I'm going to see if I can find anything of great interest. And we might be able to catch a gold sell because it's been on a merry pump today. So it's got to pull back eventually. So yeah, I have, Maria. I really have. I've spat out the dummy, and I'm very upset. It's just I see your name, Maria, and it just brings back all the hurt, and the disappointment and the pain.
I think I need some more context.
Oh, just Maria, just basically just throwing insults in the chat when I joined the stream the other week. So, nothing of great, unusual surprises.
I will say, compound traders. Yeah, the dashboard. I think there's a couple problems with it. Mine's doing the same. So don't worry though. They're trying to fix it up. So yeah, if things not working.
Best thing to do.
Just have to be patient.
Best thing to do is go to live chat. Okay, go to live chat on the website and just let them know, and they'll look into it and they can force the synchronization for you. They did have some issues yesterday apparently, so just let them know and they will they'll look into it for you. Meanwhile, Henry, don't start, because you, my friend, have got eyesight issues. So let's just I took umbrage when I said a certain presenter was my favorite. All in jest. No, you didn't. Actually, no, you did. Yeah, but yeah, I'm just ribbing you, Maria. Really, just for the sake of entertainment purposes and content. Really, nothing other than that. It's very immature and pathetic of me, I know. Gold is doing a nice little setup right now. It is contracting down, creating an inside bar on either side. So an ideal scenario would be see us take this high. No, that wasn't what I wanted to see. I wanted to see it respect that previous high, but it hasn't. But it has left this here, and it has also given us a wickless candle at the bottom. And there's definitely a trail left behind on the lower time frame for us to go hunting. So still very much looking at the sells, but need to give it a little bit more time to see when it wants to stop, if it wants to stop, because obviously it might not. But certainly the way it's started the move all the way even down at the bottom here, you can see it started with a perfect double bottom down there. We've got a wickless candle here, I think. No, we haven't. But that is an inside bar. So there's plenty for us to come and target further lower. So I'm expecting a reaction at some point on this area. We're in a nice zone for sells anyway, and I think generally on the higher time frame, I was looking at it a bit earlier, I do feel as though we've got sells still in control. But we'll see. It's trying to push past this area that I marked out. So On this occasion, I might be a bit too early, but we'll see. But what have you been looking at, Griff?
I've been looking at the JPY pairs. That's all I've really had on my radar this last week. Mostly shorts. Yeah.
Shorting the yen.
Shorting NJ, EJ, AJ. That's what I've been looking out for, but I just haven't had my entries form, unfortunately. Thanks. You even went on the 1 hour. You can see a reversal started to come along. I would have been interested in setting a pending order for a reversal here, but it's just come back a little bit too aggressively for me. So I think we'll carry on going up a bit more.
This move back up. Yeah. It's broken this area here, which I would have wanted to see a reaction from. So yeah, I can see potential moves higher up as well. NJ, you said, and EJ was your other one.
Last week there was a setup on EJ. My friend took it actually, and he ended up making some nice percentage. It was on the 4th of June, and that was a reversal as well.
The 4th of June.
Right there. That's it. Yeah. That's one that would have actually tagged you in. And that would have made around, let's see, if you use a 12 pip stop loss, that would have made around 6%. But yeah, I was on the fence.
Your entry would have been retesting the open? Or
it would have been retesting the low of that white wiki candle, the last one to move higher. So around there, yeah. And then you would have been tagged in with that inside bar. So I would have set the pending order after we broke that low with the big bearish candle. And then on the 3 p.m. candle, I think, 2 p.m. candle inside bar, that's where you would have been tagged in. And you would have trailed it way down to the high of the 7 p.m. candle.
And your stop would have been, what did you say it was? 12?
I used 12 or 15. It was quite tight.
Yeah, very tight. Okay.
Yeah, I do use a tight stop loss.
And you would have taken it down to what? Down to here?
Down to the high of the 7 p.m. candle. So the secondary trace candle, yeah, around there, we'll say.
Yeah.
So that was a good little trade. These reversal setups, I know the stop loss is small, but the MAE, the max adverse excursion, MAE, is tiny. Like I think I've shown it on here before. Like the trades that win, they tag me in by like 1 or 2 pips, so my drawdown is super minimal. And the trades that lose are the ones that move further than like 8 or 9 pips. So there's not much point in me having a stop loss larger than that, is what I've uncovered. Because I know it looks quite daunting.
Yeah. Darshan, you spam the comments, you get banned. Sorry, mate. See you asking for eat, asking for it for 5 times is not going to get you anywhere, mate. So give it some chill, and we'll look at it. It's not going to suddenly change in the next 5 minutes or something, so it's all good. Gold, I've got my gold on open on MT5, and it has started to turn around, but it's not really where I wanted it to. So I kind of actually think it might pull up again a bit higher. Yeah, there we go. So I don't really, I mean, these zones are basically negated to some extent. Oh dear, what am I doing? These ones gone. There we go. We're still in a nice area, but I just I'm not seeing it at the moment. Let's see if we've got anything going further back. I mean, realistically speaking, we're probably going to see maybe something in this area here, because we've had lots of kind of tests of this area. So it might be that we get up to here, which I'd be less interested in, if I'm honest. Although I say that, it's now forming a really nice push down. So we'll see. Pushing on up. But we'll see. Hopefully we'll get a gold trade in a little while. So, yeah, exactly. US 30. Who's that calling me? Somebody's calling me. Am I planning longs? I'm not planning longs, Jonesy. I think we're going to be short on gold. That's my bias at the moment, actually.
It kind of aligns with my trade plan as well on this time frame, at least, because it's like a large flag, that like the flag patterns that I trade. We've broken above what I would call the flag high. We get a retrace candle. I mean, it's funny how our strategies align. But yeah, if I was trading the 1 hour, that would be it would be a valid flag. It's a good area to reverse, at least in the short term, right?
Yeah,
Sorry, Mike. My bad.
LJ's pounding the keyboard. I don't know who he's messaging or typing. It must be his missus contacting him in the middle of the night. Rumors on the streets. The Wall Street says everyone waiting lower CPI to indicate surprise rate cut. Any thoughts, LJ? Which streets are these, Akram, that you're roaming to get these rumors?
On the Wall Streets.
Yeah, I'm curious. Where are you getting these Wall Street rumors?
Rumors on the streets. The Wall Street says.
Yeah, exactly.
That's funny. I like that.
Let's see what else we got. Holding the gold from 33.15. What do you guys think? I'm booking near 33.48. Yes, I think 48 might be a tad too high. That's the only thing. Just a tad. It's not giving me a clear setup as of yet. We've created this nice reaction in this area, but I want to see a cleaner setup, really. I want to see something more on the 1 minute. So I want to see whether or not we're going to come and try and take this level up here. We've now created this one down here, and we've opened up this one here. So again, we're just generating what I would define as major liquidity, but there's still a load of it down below. So I am of the belief that we are going to go to come and get this. If you look at it, there's just so much of it here that's been left behind. Once it broke out of this area from this morning, it's made a really big pump up. So I feel as though we're in a place where we're gonna pull back, but we'll see. Not yet, at least not yet. I want to see these highs retested before we go into anything. Let's pull up LJ's favorite chart though, and let's have a look at the forex strength scores. Yesterday, the New Zealand dollar, interesting enough, Griff. You were saying about the yen. The yen wasn't weak, but it wasn't strong either. But the NZD was very strong. The CAD and the dollar and the CHF were quite weak. CHF today and pound are the strongest versus the weakest. The pound has just literally just wet itself and gotten very scared of its own shadow, it seems. So certainly some opportunities, I would say, with pound CHF for sure. It's shown a lot of volatility. There you go. There's something that I was reminding myself of when I was looking at pound CHF earlier. You can control your mind, but you cannot control the outside world. I shouldn't really say the markets, but that was my reminder to myself to not be such an idiot when I'm trading. It didn't work.
Sorry, guys, I'm done typing.
No worries.
Sorry about that.
LJ's just messaging the Royal Bank of Australia just to say, right, okay, guys, release the funds. Pump
it up, pump it.
Shake
pump
the
it, boys.
market a bit for me. But yeah,
what was Akram saying before?
Akram was saying rumors on the streets that Wall Street says everyone is waiting for a lower CPI to indicate surprise rate cut. Have you heard anything?
I'm definitely from all my numbers I've crunched and stuff. I'm definitely seeing lower CPI. All this talk of inflation being sticky or because of tariff stuff or whatever. I'm just not seeing it. It's not showing up in the data. There's plenty of points that we should have seen some kind of indication. We haven't. And continually for a long time now, there's been this, this ruffle of, inflation's going to come back. Like, there's this and this, and then you get the numbers and there's nothing there, So that's definitely been my lean for quite a good number of weeks now, looking for that. And then ultimately that will eventually start to accelerate potential, loosening of policy from the Fed. And hence that goes into the things we've talked about regarding the dollar yen, and that ultimately coming down significantly lower. So yeah, I would definitely agree with that, Akram. At least that would be my lean, for sure. Obviously, the thing is, if you've got a lot of that, getting priced in by insiders, then you have to judge how much of an actual kick that will get to the broader market. As far as things are right now, the street definitely doesn't seem to be totally up with that. So we definitely could get some good moves from there. So there you go.
I think that's a sell for me on gold. We'll see. It may or may not hold. Break the low of this current that it's just formed, and get tagged in. We'll see whether I will or not. Something along those lines. It's leaving this inside bar here on the 1 minute, potentially. Closing nicely. If we can continue that way, or it's just going to tag me in, which would be unfortunate. But that would be a nice retest of 5 minutes. Still got 3 minutes left on that. A little bit of rejection on the 2 minute there. 3 minute hopefully would still sell off in this next 1 minute candle. Not what I'd really want to see. Nope. Very tight entry, but it might. No, it's going. No, that's gone. Yeah, that is gone.
What are spreads like on gold?
They're not too bad actually. They're not awful. Currently looking at 22 pips, 21, 25, 26, 27 points. So not terrible. But yeah, there we go. That one's that broken. Gives me more reason to believe that this zone that we're in actually isn't the right one, and that we're actually coming up for this one here. Because we're not forming any structure to suggest that we're happy with this one. But the move that we're making is still filled with these candles here, with wickless candles. So still very much of the belief that we're going to sell. It's just a question of from where. So I will be keeping my eyes peeled. It could be from here, but that would be less convincing. I think we may come higher. We'll see. It might just be that it just wanted to collect all of this and then sell off, which is what it's suggesting at the moment. But we'll see how the next few seconds go on this 1 minute candle, because it could be that it's just taking this wick or the lack of a wick and then pushing up. So again, now just wait and see if we can get a retest of this area, and see how we play out from there. But yeah, we'll see.
I think higher time frame still looks good to go short.
Yeah, it really does, doesn't it? It is looking good for shorts. So I think we're probably gonna chop around a little bit here. So we'll probably do a little bit something like this. Maybe. Well, I'd like that one to be respected. Apologies if you just heard that. That is not me farting. That is the builders back once again in the offices above me. So my apologies, guys. Damn those builders.
Don't worry, we can't hear anything.
Well, that's good. I'm pleased for you guys. Gold levels 33.53 to 42 is my liquidity gap. I'll be interested in price then. It will tell me to pay attention. Yeah, I mean, that basically takes us into the area that I've kind of marked out, essentially, or refined out. So quite possibly, Jonesy, quite possibly. We will see. So, yeah, the 4 hour is what I was looking at, Jonesy, but looking specifically at this area here, this was the last turning point. I mean, you could theoretically refine it up to here, but it was only tested once here. So I'm more interested in this one. So we'll see how it plays out. On other time frames, it has acted as an area of reaction. So we'll see. So yeah.
My surname is Jones, so I keep thinking you're talking to me. That's Jones, very different. I'm just Mr. Jones, you know.
Sir Jones is I'm apparently his lucky charm when it comes to gold. So
fantastic.
Yes, yeah.
So yeah, so he's enjoying a charmed life by trading gold with me around. So
yeah, I think we could be for some reasonable sells here, like you're saying, Mike. The top of that candle as well is right on that my 2 standard div indicator that I use, right?
Yeah.
So yeah, so that's looking pretty good. I've jumped into long dollar yen here at 144.50 because I think euro dollar is now topped out at that 114.32 level.
Lovely
setup. The
setup.
prior high.
That's a 2-minute setup. That's a gem of a setup. Just seeing how it just retests those. Oh yeah, lovely. Very, very nice.
Because euro dollar's at that 2 standard div height level as well. So looking for a bit of a pullback here. We'll see how far dollar yen can run. I'd like to see us get a significant push higher, but we'll see how we go. Given today is a bit anemic now. We had that early activity in Asia and a bit at the start of London, but now it's a bit snoozy and not.
It's like gold might already be on the move, so that might be one that I've missed by the looks of things. But we will see. So Griff, what have you been other than the Japanese pairs at the moment? Have you got any limit orders set for yourself at the moment?
No, unfortunately not. There's nothing. I mean, the JPY pairs were looking pretty good because they're moving in a direction, but all of the dollar pairs are basically going sideways except for GU, which is, you said before, it had this big move down, but it looks like it's retracing it now, which for me, when we get a move down and it quickly retraces, that's a good sign of volatility, and that means we're probably just going to continue ranging. So yeah, the dollar pairs that I trade, the $3 pairs, all just look quite range bound. So yeah, I've only been looking at the JPY pairs this last week, and which is great because I'm up all night, and that's when they're moving the most.
Oh dear. Are you able to focus in the middle of the night?
I am a couple minutes after waking up. Like when I first wake up, I'm like a zombie. I don't know where I am, who I am, what I am. But then later on, I'm fine.
Then it's like, hang on, what do I need to do? Right, make a bottle for the baby. Okay, all right, change nappy. Yeah, okay.
Check the charts.
Yeah, exactly. Yeah, that's exactly it.
Before, when I would be, because in the past, the markets would be a lot more active for me, and I'd be waking up, every week. This is before I had a baby, so maybe once or twice a week I'd be waking up in the middle of the night to check the charts. And there are often so many good trades. My best pairs is AUD pairs, but I learned quickly that it's easy to make mistakes when you're trading in the middle of the night. So I try to be extra cautious, and I triple check my plan and make sure that it's definitely good, because you can easily make mistakes. There's been multiple times, because I use a trailing stop loss, where maybe I'm in a position and I set, maybe I miss an opportunity to trail my stop loss and I don't make as much percentage as I could, or I set a pending order and then I don't wake up when my alarm goes off to remove it, and then I'm tagged into a terrible trade. That's happened to me once or twice, which is awful. But thankfully, 1% risk, it's not too big of a deal.
Well, that depends. That depends on why. For you, maybe it's not so bad because you take trades so infrequently.
Yeah.
But I'm pretty sure I'd be not happy sitting with 1% risk on such infrequent trades, or even on frequent trades, to be fair. So yeah. Gold.
The worst part of my strategy is that the trades are so infrequent, but the win rate isn't particularly great either. So I'm just sitting on losses for months sometimes. But I guess that's why I'm so resilient. Anyway, sorry, you were going to say about gold.
No, you're completely right. And you know what is interesting? There was something I was just came to my mind the other day, yesterday, in fact, after I'd blown my latest account, and I was like, "Oh, for God's sake, Michael, what's wrong with you?" And then I was chatting with LJ and a few others about it over the weekend, and the biggest thing I think a lot of us, at least I think, right, and it was only something I thought about yesterday, and I can't remember, I was reading something, and I thought to myself, we say that greed gets in the way of us, when we make trades, right? And I think greed actually gets in my way. But the thing is that the word greed actually has this really negative connotations, right? And so a lot of us kind of, myself probably included, without even realizing it, are sitting there going, but I'm not greedy. All I want is to make some money to have a nice life. But the use of the term greedy in terms of trading isn't that you're greedy and you want everything. It's simply that you want more than the market will give you, right? And it was a realization I came to yesterday when I thought to myself, actually, do you know what? I am greedy, even though I don't. People wouldn't describe me as a greedy person or anything like that. When it comes to my trading, I'm trying to grab more than the market's willing to give me. It was just something that kind of stuck in my mind, and I thought, you know what? Yeah, actually, I probably am a bit greedy. And
great.
it's a change in perspective of not necessarily being too hard on yourself in the terms that are used in trading, if that makes sense.
Yeah, I was going to say greed is a very I feel like that's very harsh. Way to describe it. It's not accurate, right? Really, it's probably a bit too much. Because greed is almost very gluttonous type thing.
Yes.
When it's not that kind of level.
Yeah.
Just I don't know, eager and.
Yeah, it's eager.
I don't know. What's a good in between word for the same thing? I can't think of one.
I think it is. I think greed is the right word. It's just it has different connotations and meanings for people based on 10 commandments and all that stuff, and I think that's part of the problem, is that we don't want to be labeled in a certain way. We don't want to be accused of or be seen in a certain way, and so we almost kind of resistant to that. I remember how I came across it. It was because I was looking at cognitive dissonance and how we feel uncomfortable with certain things, and how we feel uncomfortable with how we appear how our beliefs don't match up with our actions, right? And I thought to myself, well, no, I'm not greedy, but what I'm doing is greedy, if that makes sense. By taking trades with tight stop losses or holding on to trades longer than I should.
I think it's like overzealous or something. I don't know. It's not. Yeah, like surely there's a better like in between word. Because
I looked it up. I couldn't find anything better than
even like rapacious or avaricious is too much. That's again more extreme, I guess. Even more than greed.
Over ambitious, maybe. I mean, Enzo saying, Enzo, who looks like the Fonz, greed is good. Greed, for lack of a better word, works, says Gordon Gecko. Don't know who Gordon Gecko is, but if some people it works. But what I'm saying is that...
Do you not know Gordon Gecko?
No, I don't know. Should I?
Guys, all right, chat, light him up. Give this guy some grief. What is he talking about? How do you not know this?
No idea.
Come on.
Not got a clue. I think the thing is that we can't forget that 95% of our brain is subconscious. So we don't even realize it that we're being greedy. We don't even realize that our actions are being greedy. The conscious mind's only like 5%. Other businesses don't talk about greed. Wall Street 1986. Okay, well.
Yeah, from the movie Wall Street, which was made in 1987 or whatever. Yeah, Gordon Gecko, greed is good. Money never sleeps, that kind of stuff. Yeah.
Okay. Never seen it. I don't have time to see these.
What's his name? Charlie Sheen in it as well.
Is it? Okay.
Yeah, where he goes on to Wall Street and yada yada. Meant to be the very greedy, a bit gross side of Wall Street back in that day.
Yeah. Chaotic French, he says. Very deep reflection, but needs to be done to improve your emotions through trading. Yeah, I mean, I'm curious then, Griff. I suppose, given your style of trading and how you approach trading, you are less likely to have you're generally a very chilled, calm person anyway. But I can imagine, with the little one now in your life, that can somewhat blur your judgment, do you think? Or are you managing to kind of keep level-headed?
I think I keep it quite separate. The only way that it might impact my trading is like physical exhaustion, and that might make my decision making a bit worse. My trade plan is so like crystal clear. I've been trading the same way for like 5 years. So I think I'm in a good position where I'm really focusing on process over outcome. So I just keep doing this thing, whether it loses or wins, and I judge my success based on following my process rather than getting good trades, which is not easy, because I guess you kind of have to be a little bit you kind of have to blind yourself to the hardships to be able to continue following your process. And I guess I've gotten quite good at that, but some people could call that, being naive. But I think for me, because in the larger,
naive. I think that's being like stoic, right? Where you sort of,
it depends on how well the outcomes are, because ultimately we are trading based on the outcome of our trades. But to focus on process, I guess it requires discipline. But you can also just like ignore it. I don't know if which I'm doing, whether I'm disciplined following my process or whether I'm ignoring outcome rather than focusing on process, if you know what I mean. Because ignoring outcome would be bad if you are losing trades,
then that's like
if your process isn't working anymore,
then that's just like arrogance, right? Then you just trying to just do something when it's clearly not working, and despite that you ignore it and just keep hammering away, you're gonna get smashed.
There's so many layers to trading. Being really honest with yourself, though, is like the best sign, I think. So, Mike, you sitting down and thinking, yeah, maybe I am a little bit greedy, whereas previously you were just like, you didn't even acknowledge it. It wouldn't even penetrate. You're just like, I'm not greedy. This protective barrier is there. But once you take that down and you actually consider it, you're like, oh well, maybe a little bit. You know, that's the mark of a good trader, I think.
There you go. There's my favorite audience member, Maria, with a very, very wise statement there. Speculative.
That's pretty good one. Speculative. Yeah, that's
enthusiasm
that's a good one.
that may exceed rational judgment. Thank you, Maria, for that one. Much appreciated. Appreciate what you did there for me. Thank you, Maria. Always
a nice way to say greed, isn't it?
Yeah, exactly. Okay, tell me in the chat, guys. Honestly, now, anyone else feel like they go through that? If you sat down and really thought about it, right, this very minute, sit down and think to yourself, right, is there greed affecting your trading, right? Is there greed, trying to push you to pass, an account? Griff, I don't think is at all. Griff is just very, very disciplined and focused. But I do wonder how many people out there are sitting there going, "Oh, greed is just screwing me over." But the word greed is almost that cognitive dissociation, right? It's like this is uncomfortable. I
think it depends what a big part of it is like what kind of time frames are you thinking in? If you're thinking very near or short term, like then you're going to be more inclined to that, right? If you set things out as like a very long timeline, you're not worried about today, tomorrow, because in the vast thing of it, it doesn't matter.
I don't think I'm thinking too specifically about time frames. I think I'm more thinking about just the general approach that many of us take to trading, right? Our desire to make profits, our desire to kind of.
But that's what I mean. So like, because some people, you set out and go, okay, I'm going to treat this like a career and a job, and other people are sort of, trying to make money now. They want hot money, that kind of thing. If you extend that timeline and go like, okay, think about it in that long aspect, and you do, take out whatever you want to assume your compounded number is going to be, and you're like, oh, okay, cool, I'm going to be there in X time. All I got to do is the process each way. And does break it down and pull that apart, because now it's irrelevant to what happened today or tomorrow, because you're going to have to do it in another. So if you got 10 years, that's 3,650 days. What is tomorrow, the next day, next week really matter, right? It's a fraction of a percent of the total. You're like point whatever percent of the total time frame. I basically what I'm saying is I don't think many people really think those through those long time frames, or they might have some idea of where they'd like to be, but they're not really critically implementing the things every day that will get you there. Because it is much easier to go to things now, and you want to you're thinking about next month and the weekend and whatever, right? I guess
I
think that's a good
my
way of
2
putting
cents there. I don't know, because I think that's one of the things where I've always thought in those time frames. And then hence whenever anything is going, sideways or just not 100% working out, I just go, okay, well, what is this in the blip of, what I'm trying to do here? Okay. Oh, well, right. And then it makes it very easy to come back the next day and just go start again. Every day.
I know exactly what you mean. I think I've definitely, I like, if greed and fear is like a spectrum, I'm definitely more on the fear side, like fear of missing out and all of the things associated with that. For me, greed, I feel like I don't have that so much anymore, because I've told myself that I've definitely felt greed before, but I like LJ said, I realize I'm in no rush to make loads of money trading. I think greed comes into it when you're like, I need to succeed right now. But if you take that pressure off yourself, and like, if I have my £1 million in like 20 years, I'll be happy. I don't have to have it right now. And that reassurance can really help with greed. You're not trying to rush it anymore.
Yeah, you're
and
absolutely
it
right.
always depends if you're aware of it, though, right? As well. Because I get friends, obviously, because this is what I do, and you get, friends or other family members or people coming up to you and asking about investments and markets or whatever and what they should do. And then they want to jump into this thing or that thing or whatever the hottest, latest, whatever thing is, or crypto or some other thing. And it's like, they're like, oh yeah, but I could get like 10 or 15x here or 5x or whatever it is. And, they don't want to do the, 20%, just, 10 to 20% if you have like just an ETF, right? Okay, you go, fair enough. You want to make a bit more than that. But they then jump immediately from that to like, 10, 20, whatever times the sort of baseline that you would expect. And that's, I'm like, what are you trying to do? Like buy a Rolex tomorrow? That's what I always say.
Yeah.
That exact
it's so
phrase.
true.
And then they kind of go like, oh yeah, true. Actually, not really. Why am I,
Yeah, that's
right?
greed. I think what makes, because trading is a greedy thing. We're trying to make money online, So I guess the thing which differentiates between a greedy trader and a trader is time and like the pace which you want to make that money. You're a greedy trader if you want to make it quickly, and you're just a patient, disciplined trader if you're happy making it over a long period of time. That's the difference, I suppose. You're right.
I've always thought of it as, which seems opposite to most people, I guess, micro slow, macro fast. Which is the kind of in the micro in the short term, you go slower, which actually makes it faster in the long term. Most people always try and do fast now, and then they think about the long term as a slow grind.
Yeah.
But if you flip it the other way, going slower in the near term actually ends up being faster in the long run, right? Because one of the big parts is just not making errors. It's taking the negative hits. It's like, what's Warren Buffett's, 2 rules? First rule, don't lose money. Second rule number 1, right? That's the main thing. If you can just keep that gradual compound, you'll be away, right?
Absolutely. I mean, it was something that I found myself just thinking, do you know what? There has got to be I know that there are reasons why, right? There are, yes, I am, Jonesy. Slow is smooth is fast.
I like that. What's that from again?
There's another one that I really like, which is less haste, more speed. But yeah, I mean, the thing is that if you look at it from a perspective of, my trading has been all over the show for various different reasons, right? LJ knows into great depths, the various different challenges as to what I've been battling with and everything else. But ultimately, it has, it was kind of a moment of self-reflection. I thought to myself, yeah, I'm just being greedy here. Whether I like it or not, whether I like the word or not, or whatever it might be, I'm just trying to, to ease my anxiety against my financial burdens. I'm trying to, almost force things through that shouldn't and don't need to be forced, right? And I just wonder how many others out there are facing the same dilemma. Before I started working on ABL, I didn't have an income, so my trading was, was obviously going to be detrimentally impacted because of that. If I look at we were talking about it on the stream this morning, I think, LJ, the last time I got funded was October last year. That was around about the same time that my redundancy money from my old job ran out. And then it was like, okay, how am I now going to make money to pay my mortgage, to pay my bills and everything else? Because the runway that I'd given myself had run out. It was time for the plane to take off, Curious thing just to consider, absolutely, Louis, my old maths teacher, Mr. Coughlin, God bless him, always used to say, keep it simple, stupid.
Yeah, my maths teacher too.
Keep it simple, stupid. So yeah. I think of it like this: it takes 9 months for a baby to be born. It should take 9 months for a baby trader to be born. Then you go to trader kindergarten, where you learn the alphabet. Then you go to primary school, where you develop the working knowledge for 7 years. That's an interesting way to look
It's
at it.
not a bad way of looking at it. Like, to be
It's
fair.
not a bad way.
I mean,
looking
yeah,
at it.
it's all, you know, crawl before you can walk, I guess, that kind of thing. Yeah.
Exactly. I guess that means that the LJ has gone to high school now by that definition. So
I started in college. There we go.
LJ started in
University,
college,
whatever you want to call it.
and then a further 10 years for your bachelor's degree in trading. Yeah, exactly. And by which time you eventually then decide to retire. So yeah, but no. Well, listen, Griff, I know you've got to jump off, but it's always a pleasure to have you on, mate. And
Thank you. I appreciate it.
We look forward to you having no more trades again next week. I saw there was a comment from somebody saying that you needed to take a competition with somebody else. But no, we always love having you on, and your perspective on things is always very much appreciated. So great to have you with us. We've got Deanna waiting in the background. I'm not sure who's joining you, Deanna. I think it might be Victor. I say his name and he literally popped up on my screen like a magician. Guys, we'll be right back after this with Victor and Deanna. That is it from us, from the ABL team. We will see you again tomorrow, and make sure you come and join us on ABL as well.
Cheers for now,
Thanks, guys. Good to see you.
Cheers, guys. Take care.
Bye.
And we're back. How is everyone doing? How are you doing, Deanna? There is Tuesday, the 10th of this beautiful month. How are you doing today? What are you looking at in terms of the market? You're muted.
My bad. Here I am.
No problem. How is everything going on your side?
It's going great. Welcome to everybody in the chat. There's a ton of participation in the chat today, which is super awesome. Hi, Louie. Welcome, everybody. Great to see everybody today. Good to have Victor back.
Yes. And we see some quite nice price action in EU. We will break that down soon. That's that little pop that we just saw live on the screen. That's those structures being broken. That's how the market reacts to them. And that's the confirmation that even though the structure breaks, it tells you that you were able to identify them correctly, right? Because it matters. The market moves when it breaks or respects them. So that's the confirmation on technical analysis for those who think, it's all abracadabra. It's not. Deanna, how are you? What are you looking for today? Do you have anything specific? We have Marina saying hi to me. I think it is to me, not to to me it is. I'm just kidding. I think Marina is a big fan of yours, Deanna. But coming back to the...
She hasn't been here for a bit, so it's great to see you, Marina. Thank you for saying hello. Lots of people in the chat today. It's so fun. And I saw that a lot of people were commenting in the chat earlier with the Alpha Beta Lab guys. So great to have everybody. I see Void, Peter. Hi, welcome, Danny. Ivy Dell, is that how you say it? UK swing trader. Great to have everybody here.
Yes, it's great. It's great when we have good engagement from the audience because it gives us satisfaction. I am sure that holds true for all the hosts. there is no better reward than seeing the engagement and seeing people reacting to them, right? That there's nothing more pleasing and satisfactory than seeing that as a host.
Well, that's definitely
Deanna,
true. It's definitely
right?
true, but I also think it just makes it a whole lot more fun because trading, in my opinion, is lonely. And I just think it's fun to have people come and talk about the things that you enjoy talking about, which is trading. So I really appreciate when everybody is so active in the chat.
Awesome.
And of course, we like the attention too, I'm sure, but it's fun to have community.
Yes. Well, I don't know if I like the attention. I'm, or maybe I do.
I thought that's what you just said, that you like the attention. I just like hanging out with everybody. It makes me feel good to think that there are other people that enjoy talking about this stuff too. My neighbors, my friends, nobody wants to talk about trading and the markets. And so this is a great place to come and hang out and, talk about interesting things with like-minded people. Good morning, Vinicius. Welcome.
Yes, that is yes.
Sorry, go ahead.
No, yes, yeah, that is true. I think that's true for me, myself as well. I don't in my immediate circle, circle of contacts outside of trading, nobody's interested in trading.
Mm-hmm.
It's they hear you for maybe 30 seconds. And if
you're lucky.
If you're lucky, maybe 30 seconds is really paying attention to you. It's more about, like saying hi, but not really, having any follow-up questions because, it's not their thing. And I don't blame them. Mm-hmm. Everyone has their own interest and passion. So it's great when we're able to share that with others in our community, either through YouTube right here. That's why it wouldn't be a bad idea to hit the like button, just a hint, or in a Discord community or the ABL community. Community is a big part of what makes us, who we are. We all are part of communities, either in sports, in education, in professionally, in our hobbies. We're all parts of so many communities we don't even realize how, and it's very important for our development, for our networking, and even our mental well-being, right? Talking about things is very therapeutic. Wouldn't that be true?
Absolutely. And connection with other people. That's the whole reason why I started on YouTube and Twitter in the first place. Is connection with others is super meaningful. We know that's super important. And also, if you're like me, I just really enjoy hearing from other people. I love that we see a lot of the same faces. I guess not faces, but what do you call the little, little pictures, same names. It's fun to see new faces and fun to see people coming back and joining us. So really appreciate the community here. Victor, do you want to start with EU and I'll talk about the S&P? The S&P is moving this morning and there's plenty to talk about there. Do you want to start?
I think yes, I'll go through EU after we say hi to everyone in Jamaica. Yeah. Let's look at the EU. Whenever I hear how is that song? That song goes that starts with Jamaica. It always comes to my mind. That very popular song, right? I'm not gonna sing because I'm a terrible singer.
I'm trying to think. There's some good ones, Jamaican songs, but I'm not sure which one you're talking about. I love Lizzie said too that she talks to ChatGPT about trading because you have no one else to talk about. And ChatGPT is a great friend regardless, has so many answers. So that's not the worst thing in the world, I guess, but I think it's also great to find people here. And even sometimes you can connect, via Twitter or YouTube, meet up with somebody, and maybe even in the Discord. There's lots of ways to find connection, but it is so, so important. One Love. Yes. There's a lot of good Bob Marley songs, which I think he's Jamaican, right?
I think this is the song. You know this song? This one, the lyrics
Oh
to
yeah,
this
that's
song?
by the Beach Boys.
Yes, it is a very
Yes, I
popular
know that
song.
song. That wasn't
And
when I was.
all right, so let's continue, because this is it is fun to talk about songs as well, but we are here for the charts. All right, let's let's look for.
Well, you can still be white and be from Jamaica. Bob Marley is not white though. Am I saying the wrong name? Bob Marley.
No, yes,
He's not
I
white.
think I don't think he is, but he surely can sing, or could sing, I should say. All right,
I
so all right, let's look at the chart. So looking from the higher time frames, coming very quickly, we just touch upon this very quickly. We are in a monthly time frame, so be wary of other time frames. Let's say the weekly or the daily suddenly getting very bearish and having reversal patterns. We shouldn't be all too surprised, because on the monthly time frame we are currently in an area where we should expect some selling pressure coming in. So until then, we don't do anything with that information, but it's just there on the background. You just put it as a book you want to read soon. You put it on the bookshelf, and whenever we start seeing those reversal patterns on the daily, and perhaps even some candlestick combination on the weekly, we can then start thinking, okay, maybe this monthly might have a thing or two to do with that, and we could build our case. But it's just something we want to have in the back of our mind. So other than that, there isn't anything on the weekly time frame. We broke that weekly previous high some time ago. The market closed many bars above that. Soon looked like it was going to be a fake out, but we recovered, closed very bullishly, and since then we have been creating bullish order block on the weekly. That's very, very significant. We get a significant level being broken, and the market confirming on the weekly, right? Not a small time frame at all, confirming that this breakout has legs to run with, right, or to run on. Meaning we could see, if nothing else changes, we could see there's a very strong continuation, especially if you consider where we came from, right? We gotta understand that the market moves sort of like a car, a driver in traffic, right? It has each time it gets to these significant areas, it's like it got to a traffic light or an intersection, right? It has some time to gather its bearings, but soon it will it decides which direction it wants to go. And this seems to me, at least based on the data we have now, that we broke that level and we created two order blocks that we could, one of them, the last one, be retested this week. But it looks to me that the market is preparing for another leg up. And by the looks of the first leg, you can get an idea that the second leg, even if it's not as big as the first one, even if it's only 50%, we're still talking about a lot of a great distance. I got a sneeze. I'm gonna pause. We got 670 pips, more or less. Yes, I paused that sneeze. I hope I paused it correctly. Let's see. So we have 1,395 pips. That's what I'm talking about. That was the last leg. So if we only have a small, right, a 50% continuation of that same leg, that would be still 600 and 680 more or less, or actually almost 700. So that's just to put things into perspective, what we could be having as a trend following from this breakout that has been now confirmed by price action. So if you go to the daily time frame, so before we go to the daily, we want to be watchful if price ever comes back to this weekly in the future, right, the next couple of weeks, because that could be a great entry or great area to be entering for that continuation on the higher time frames. Let's go to the daily. So what do we see? We don't have a reversal, a bearish reversal. Remember, the neckline is way, way low. way lower than we are currently, and we had a retrace with didn't break any structure in this time frame, and we reclaimed. And let me indicate this with some arrows. We created 1, 2, 3, 4, and possibly today, if we close above yesterday's high, we could be creating the how many I lost track. The fifth, I think, would be actually the fifth structure, telling us that the buyers are firmly in the driving seat. Right, all of that is telling us that there is momentum building up for a continuation on the higher time frame. So let's keep that in mind. Let's see for opportunities. If that's the direction that price is likely to be going in the next couple of sessions or weeks, the idea is how can we participate in that direction? We are currently in a bullish, in a bearish structure, even though it is against what I just explained. It is there, so we could be looking for lower time frames reversal from there, but I would be taking those as intraday moves and not for much higher, because it's against the higher time frame bias or expectation. We did have a very beautiful setup that I took in last week, which is this trade, and that's a quasi, and the TP for that intraday was already hit on on that day that I took it, but the daily target is way above us. And actually, this is, let me move that. That's this is the TP, but typically I would front run that TP with that's the structure basically where it should reach, and I typically would front run for the remaining of the position. That setup is still at play, right? So and this is what I mean, and I'm going to keep it short. So but this is what I mean, that once I have the position in, and it actually makes that move, the biggest move of that day, which is what I taught last week, I put the stop loss into at break even with a little bit, and I try to forget about it. I let it go, because on the lower time frame, it seemed a position seems like it needs to be close, right? It's going to make all these movements. It doesn't make sense for a price to go so much back against you. However, the remaining of that position is not based on the lower time frame. It's based on this time frame, on the daily time frame. It's a daily trade, a daily signal, meaning that unless it comes back and pierces this order block a bit more, it's all fine. This is all acceptable in terms of fluctuation for that trade. And this is a very not very conservative, it's still relatively conservative in terms of targets, because actually this is the ultimate target of that position or that entry on the daily time frame. So it also has some weekly structures to it, right? So that position is still running. But on the lower time frame, I'm a bit looking for I'm still looking for another opportunity, because I still think this is looking to be it's building up momentum, but it's not quite there yet. It's not very obvious yet. The position and the signal that we got from last week, that's fine, but currently where we are, it's not telling us a great deal. It's not forming a inverse quasi. It's still holding this area, going basically sideways for some time, since this is from Friday. If you look for the lower time frames, you will see that it hasn't really done much. It's a bit directionless. So I'm still waiting for some indication of what price wants to do. It's not clear to me. What I would say is that we are currently in a bearish order block, so I could expect some bearishness coming to the market. Maybe that already happened, and that is what created these wicks. But what I would do is just wait. I will be patient and wait for a reversal. We did have a fresh order block on the H4, but it has already been retested multiple times, so it's not something we want to be trading anymore. And not only that, we can see that it wasn't very effective, very precise in stopping price. So it's not a great order block to be trading. Even that's multiple reasons not to use that. Intraday, I'm still looking for a possible reversal from the structures we have here on the M15, because we do have within that daily bearish structure, we do have a H4 and an H2 and an H1 as well, even though they're overlapping by a lot. That's exactly what you want to be looking. So I'm eager to see if it gives us a signal on the M15. And it looks like, by the looks of that wick, that could be happening right now. Maybe we should zoom in to the 5-minute to see if we have any break of structure. Before I went on the break, I mentioned we needed to break this quasi on the 5-minute for us to start looking for a short. That hasn't happened yet, and by now the structure on the 5-minute is actually a little bit closer. So this is perhaps the first indication that we could have a reversal. We'll have to be patient. It needs to break it and then come back to this area on the 5-minute in order for us to take a trade from it. This would make a lot of sense. It's quite wide, so I don't like when it's that wide, but it's still there. So if you have enough confidence, I think this is a great trade to be taken. Let's double check the ATR for today. What is the ATR? It's looking very bullish, though, I have to say. So if we take this trade, let's remember to keep it, the duration very short. Is 67, basically 68 pips so far, and the ATR is currently at 79, basically 80. So what is it? 10 pips still left for the daily range to be expanded. The question is on which side it's going to be expanded. By the looks of it, it looks like it wants to be on the upper side to be expanded, meaning if that were to happen, then obviously that this trade is going to be stopped out. But those are the probabilities, right? So you take this, even though it looks on the higher time frame that it's not going to do anything, succeed, I mean, on the 30-minute, that would be, given the bullishness of the higher time frame, I wouldn't target anything much lower than this, because they're targeting this seems to me a lower probability. I would just take the first trouble area, and that to me is that area. It would look like something like this. We'll have to see if it actually triggers. Maybe we can even take that on as a live trade and trade something like this, just a little drop on its way what seems to be a higher level. So that's on EU. It looks that the market is going sideways, holding these structures between these daily order blocks, as we can see here. Let's indicate that we are playing with bouncing between these two order blocks. It looks to me it's holding quite nicely for a continuation to the upside. But the question is, when will that happen? Will that happen today? Maybe. But in the meantime, on the lower time frame, we can identify a little short that I think makes a lot of sense before price grinds up, because this reaction is quite without any retracement, and typically these big movements, they will have some kind of retracement before they continue. So the momentum is to the upside, but if price action and structure tells us that this could be a nice short, I think it's a great idea. That's on EU.
Great, sounds good.
All right. Yeah, would you like to talk about gold? Gold that has a lot of movement today, you mentioned?
Yeah, we can look at gold. I have the S&P up. Let me just pop over to gold. So we talked a lot about gold yesterday. Jonathan had a trade that he was looking at. Believe it was somewhere, I don't know. Let me know in the chat if you remember where his entry was. But basically, he had taken a long somewhere in here. And what we talked about yesterday was just that gold has been, at least from my perspective, a little bit tricky lately. Oftentimes, gold tends to trend, and we really haven't seen that as much recently. So what I mean by that is, you see these this long trend opportunity here, and then even when that turned around, it started to go lower, but it continued to go lower for 3 of the 4 candles here, continued lower here, continued higher. So there's this really nice trend action that we often see in gold. But what we've been seeing lately, this is a daily chart. What we've been seeing lately is price has been a little bit trickier. There's consolidations. If you trade ranges really well, this could be a good area for you to trade. But if you're looking more for like a trend style, it's been a little bit more difficult. So yesterday when Jonathan took his trade, although I was saying that for me, gold has been a little bit complicated lately, there was a really nice dip below this previous day low, and then price pushed higher from there and, put in a pretty decently strong day. So just recently in gold, we had price take out the previous day high and then drop back below it. So we'll want to keep an eye on that and see how price continues to react. So here it is right here on the hourly and the 15-minute. You can see this line here is the previous day high. So price popped right above it and then dropped immediately back below. On the 15, you can see it even clearer. It did close one 15-minute candle, but then the very next 15-minute candle, it was right back below. So to me, this is a really important level to pay attention to if gold will continue and be able to get back up above that previous day high and continue higher, which, it looks like it might be able to do. We'll have to see what happens here. Or if we start to see gold, drop below that previous day high. That's something that I would be watching for in gold. For me, I'm going to hold off trading gold until it gets to be a little bit easier price action. When the conditions are good in gold, it can be pretty easy to trade, or, as easy as it gets in trading, which is not easy, but you know what I'm saying? It's a little bit smoother sailing. This is just really difficult price action, I think. What do you think, Victor? Have you been trading gold lately? Or how do you...
No, I haven't. And we talked about this. Gold has been a little tricky to read. I agree with you. I'm not going to go into the details, but I think today we had a nice reversal off of that daily order block. It's not... I will maybe show my screen later on, which hit target, by the way. But other than that, I think gold, it hasn't been showing its best cards yet for us to trade, where you have clear signals, clear structures. That's not the case on gold currently.
Yeah, absolutely. I mean, if you're trading super short term, you could maybe, like I said, if gold can't get above this previous day high, that could be a probabilistic setup for you if that fits your system, where you could take a short here. But to me, it's just, there's just not enough, again, obvious isn't the right word either. Easy, obvious, these are not right words for trading, but that's, relatively speaking, I want gold to be a lot easier to trade. Otherwise, I'm just going to stay away. But on the other hand, in the indices, it has been much smoother, much easier to read and to trade, especially if you are looking for kind of like failed breakdowns. So here is what we have. This is the daily chart. So as you know, we had a huge uptrend and... Sorry, my dogs are barking. Huge uptrend, basically made an all-time high and then tried to move past that, and price just could not get back up there again. And then that's when the huge spillover happened, the big dump lower. And so lately, prices started to push higher. We have a series of higher low and higher high, and we're getting a nice trend upwards. So including a couple large gaps, one here and one here, that have never filled. And so that is, this one partially filled, this one never filled at all. So really strong market in the S&P, and NASDAQ is similar. So what I like about this this here, and this happened overnight. So for me, I was asleep when this happened, but my dogs were waking me up, and I happened to check the chart, and there was a really nice trade here where price had taken out the previous day low. Right here you can see just barely took out the previous day low and then pushed higher. So kind of the reverse of what I'm talking about in gold right here, just barely dipped below. And then when you look at the hourly chart, you can see a little bit cleaner. Here is that daily previous day low, just barely dipped above and then made this huge reversal higher. Now you might have gotten faked out on this one here, or if you were taking really nice quick profit level to level, maybe you locked in some profit and then maybe you re-entered here. But ever since this happened, price took out all these swing lows, all this liquidity here, and super strong push higher. So to me, that's what I'm going to continue watching for in the S&P, is to see if there is another opportunity. I do think this was probably the big opportunity of the day, but you never know. We could see maybe another setup as well. But this was a super clean, if you're maybe trading the Asian session, the London session, maybe you were around for this. Let us know in the chat if you were able to catch this one. But that is looking pretty good. And then taking a look at the NASDAQ, you see a very similar situation, except that on the daily time frame, the NASDAQ did not take out the previous day low. So it stayed a little bit above it, still took out some hourly swings, and there was a nice push higher from there as well. Took out this hourly swing as well.
Deanna, you mentioned something interesting. You mentioned that it was your dogs that woke you up, and that was the trigger for you to look at the charts. You happened to open the charts and you saw some opportunity. I was wondering, have you thought about testing your dogs as indicators?
Yeah, that's a good idea. I don't know. She's been keeping me up a lot at night. So if I look tired, that's why. No, I don't. I haven't, but maybe that's the situation. Or I should just put her on duty. I should have her so she can, when we get some price action like this, she can wake me up. Just keep her in front of the screen all night.
Maybe she can be
good idea.
Yeah, not a automatic alert or human alert. That will be a canine alert.
Yeah, there
might be some edge here.
So why not?
All
right, Dr. Vegapunk said I caught it. So caught that move in ES. That's awesome.
Nice. By the way, I'm going to switch very shortly from your screen, Deanna, with your permission. There is the reversal that we have been talking about, or the opportunity that I've been talking about on the lower time frames, right? The higher time frames, the H4, the daily, and the weekly, are telling us that the direction favored by the market by price action is to the upside, and there's no question about that. I think the market is positioning itself for continue to go higher. The question that I still have is, though, are we going to have a breakout from this level and a continuation right away? We know that's likely to happen, but what's happened in between? Do we go straight for that continuation, or do we have a possible reversal and retrace before we do so, right? And let's see if we have some indication of a possible retrace, maybe to something, maybe half of the move we had before that continuation. That would be something that's perfectly healthy and still fits within that bullish theory or bullish thesis. What we have is, of course, we have the H4, right? We do have an H4 here that is currently being retested. We have also on multiple time frames on H2 as well, although these bullish price action, which is reacting on that to the left, tells us that it does have a chance of continuing eventually. On the H2, H1 we don't have anything, but on the 15, as I mentioned earlier, we do have a very nice quasi, which is the neckline is around here, right? So it broke. That's the left shoulder, that's the head. It breaks it, creates a right shoulder that reacted very nicely, had a continuation, and comes back for a possible second right shoulder. Just a possible. But what happened just about 4 minutes ago and 45 seconds is that if we look on the higher time frame, you can actually see that the daily order block, that's the big brown structure we have behind us, the shaded area, it created as well a bearish reversal on the 30-minute, right? Perhaps even on the 1 minute. I didn't check that. Actually, it did as well on the 1 minute, but there is nothing there to be used. But on the 30 minutes is the first time frame that you can see that. And what I mean is that there is a neckline. That will be the head, the neckline, the left shoulder. And if we take from this point all the way to the head, and we break that down into two halves, and we look for structures on the 30-minute in between the upper half of that reversal or that move down we had previously, we do identify a very nice entry order block on that quasi. It doesn't have H1, H2, H4 alignment like I would need to be entering, but that doesn't mean I think it is enough for a possible pop, not a pop, a drop in this case, to make something this trade a good idea, right? A trade that I'm looking for would be with alignment is all the way to complete the reversal pattern. But in this case, because the higher time frames are bullish, I would be only looking for that partial drop into that area. So we have on top of the 15-minute, which is locally, this is the high, the left shoulder, the neckline, etc. We also have from to the left, we have a bigger quasi in the 30 minutes. That's the neckline, the head above here, and obviously all of that would be the left shoulder. As you can see, when you have multiple structures in the market telling you that something is likely or has a good chance of happening, the more things you have, and these are two structures telling us that this is a great place to be taking a short, even though my expectation is that eventually EU will be higher, let's see a day 2 or 3 from now. In the interim, I think I can perfectly see this reversing from where we are. And so if that is the case, I want to be, you could already, based on the 30-minute, not on that line, but I mean on the 30-minute, if we zoom in, what do we have there? What do we see here? Right, look at this, these two candles. We have a bullish structure, or bullish candle, not a structure, and a very large wick, meaning the market tried to break out, and at least in this candle failed doing so and was rejected, and it closed as a bearish engulfing. That could be enough indication, because remember, this is the 30-minute. That could be enough indication to tell us that maybe the sellers are trying to get in to push price lower, and that could be a case to be going to the lower time frame to see if we can find that reversal. And so far, it hasn't happened yet, right? So it hasn't broken the structure yet on the 5-minute, but you can see how neatly it's reacting to these structures. So that's something that I'm going to be looking at. Now we're getting to that 5-minute, but actually that 5-minute is not actually tradable. This order block, I mean, because it hasn't broken structure, right? These structures, the neckline needs to be taken out before we start looking for the entry. But I'm still looking for that possible reversal coming in to see if this is something I would, well, it's not part of my main strategy because I don't have alignment on the hourlies, but this is the type of entries that I would take personally. I would be taking this other than the fact that it doesn't have the alignment that I need. But this is the kind of trades that I do take when it does have the alignment needed. So that's something that I wanted to express or share with you guys on EU. Let's see does the chat tell us, right? The one thing we have one thing we want to be seeing is how does price behave when it gets back. So supposedly this is the area, right? In this time frame, in any case, this is the area the sellers have, set the tone or set their stance that they wanted to defend, right? That's what created this big candle. And if only I can get this to work, this big bearish candle. So the one indication if there is going to be a reversal is how does price action react? How does it behave when it gets back to that area? It is a supply area, and if that's going to be true and it's going to hold, it's supposed to behave as such, right? A supply area means that when price gets there, you're going to see smaller bodies, right? It's going to decelerate. It's going to reverse back, not thinking, but moving back to the, reverse, going this way. I mean, it's supposed to go up, and you will see, smaller candles, and then eventually it will start going the other way, right? If you see that happening, that could be your confirmation that this reversal is actually going to happen, and that could be your entry into that short if that's something you like taking. Let's see on the 1 minute if we have an entry. I don't have anything on the 1 minute. The 3, no, just the 1. There is a little area here that I could see a reaction from. The 5 minute hasn't reversed yet, so the neckline is the likelihood of this holding is less because the 5 minute hasn't reversed. The more time frames the reversal is visible in, the more likely it is going to hold or be success. So this is the only area that I see so far for price to react from, and until then I'm not going to do anything in any time frame because all of these, this has all of these haven't broken their necklines yet. That sounds gruesome, but it's only on the charts. All right, so yes, so that's something I wanted to share with you guys. That possible reversal on EU, we'll keep an eye on it, and I'll tell you guys if there's something to be traded here in a short while. Deanna, so you were saying about you went through gold and S&P, I believe.
Yes, and I see we have. Sorry, go ahead.
There was someone asking about the US 30. Is that something you could look at? Maybe see if there's something similar or something. Is it different, or it maybe some other opportunity or observation on that asset?
Of course. And I see that in the chat we had a really good name for our dog indicator. Doginachi. I think that's a good one. All right.
We should look into it.
Yes.
Who knows? They edges could come from all different kinds of places. I don't think there's any logic to what this is. Obviously a joke, but there could be something from unexpected corners where edges could be had, and it's always good to be observant. I mean, this one doesn't make sense, seriously make sense. But hey, I want to have my eyes open for anything that could give me an edge.
I think she's probably a better alarm clock than an indicator, but you never know. All right, so this is the US 30. And it looks pretty similar to the NASDAQ. So I was looking at NASDAQ futures. You can see it's pretty similar. So we talked about in the S&P how the S&P took out the previous day low. And when that happens, that can be a really strong, so it takes out the previous day low and then pushes higher. So like this, it just barely took out the liquidity below the previous day low and then pushed back above. So earlier in the session, it took out the high, previous day high, dropped back in, took out the low, pushed back up. In the US 30 though, we are not seeing that. So just like in the NASDAQ, it never actually dipped below the low. So not as strong of a signal there, but maybe you're watching multiple indices and that can be helpful to watch multiple. And then you see that on the S&P, and that maybe gives you a stronger indication that this could be a possible area to enter. So even if you don't get that on the daily, looking over at the hourly here, on this last little push, price did break above this hourly swing low. And maybe even here, this is where I talked about on the S&P, you might have thought, okay, price is reversing above this low, and you could have taken an entry here, although likely would have stopped out. On the S&P, if you were taking your profit very quickly, level to level, you might have gotten a little bit of profit on that one. But here, probably would have got stopped out, and second attempt, you could have gotten a really nice trade going long on this. Out of curiosity, why? What is the interest in trading the Dow 30 over the S&P? I'm just curious because I don't know. I would love to hear your reason. There is a ton of volume in the S&P, which is why I prefer it over the Dow. But there are traders who prefer, even the Russell, the Dow, and of course the NASDAQ as well. And I like trading the NASDAQ as also, but I don't typically trade the Dow 30. So let us know in the chat what it is about the Dow that causes you to prefer to trade that over the S&P.
Yes, we do know Hamed, for example. I don't know if Hamed is with us today, but there are a couple of traders who are always asking us about the Dow as an asset to be broken down, to be analyzed, and it's interesting. It's interesting to see you guys, your opinion, your ideas, why you want to specifically this trade. I mean, any asset is tradable, so there's obviously nothing wrong with that. But is there any special reason why you gravitate towards Dow 30 instead of the other indices? That's the question here. Someone, Thiago Fonseca says, I think Dow, in terms of pips, move can be a bit bigger. Okay, that's a fair point.
And I'm not sure. Does somebody know the point value in futures of the Dow? I've never traded the Dow futures, so I really am not sure, but I do think that I've seen another person recommend it. And so as far as movement, so at ATR on the daily is 580. On the S&P, this is futures, so it's a little bit different. It's only 90, but on the NASDAQ is 400. So yeah, maybe there's something to that, but $5
per point.
Okay, so same as that. Okay. Well, then that would make sense. How many people trade? Let us know in the chat. If you trade the indices, what is your top indice that you trade? So S&P, NASDAQ, the Dow, and the Russell. What is your preferred, or what do you trade most? I'm just curious. Only trade NASDAQ. Okay, NASDAQ. I used to trade NASDAQ exclusively for a long time too, and I just recently kind of switched. Okay, NQ and ES, DAX. Oh, okay, DAX, good. What else? Let us know in the chat. Maybe I know we have a lot of gold traders here as well, but just as far as indices. Okay, so it seems like there's a preference for NQ, and I would maybe say, or NASDAQ, and I would maybe say the DAX is number 2 in the chat so far. NASDAQ, Dow, and Russell. Okay, the DAX as well. All right, interesting. Thanks so much for sharing, everyone.
I think it's the number of points. The same thing as with gold. One of the thing I think, well, that's an assumption of my part, but one of the things that is so attractive about gold is that it moves a lot, right? So when you have that chance of making a lot very quickly, although that's not a good thing from a risk management perspective, but I mean that's probably one of the things that attract traders to it, because it moves. It actually has some momentum to it when it moves. And I think Dow as well, because of those, you see those points, and if they are the same value as S&P, I was going to be making many more points in comparison if you have the same contract size.
Yeah. And when the going is good in gold, it's great. It's a great asset to trade. I think it's just important to know, like, when the good times are to step aside. And to me, it's always, I guess, especially as a newer trader, was always very confusing what people meant when they said that, knowing when not to trade. But I think in gold, this is a pretty good indication that things have not been, like, compare this to this, even though this was an uptrend for a long time, these down periods were much easier to trade relative to this, but this won't last forever either. That's the other thing. At some point, gold will get back to more of, the norm, and then it'll be easier to trade gold again. So I see a lot in the chat that people prefer NASDAQ. And like I said, for a long time, I traded exclusively NASDAQ. But between NASDAQ and the S&P, let us know in the chat why you prefer NASDAQ over S&P. Or sorry, NASDAQ over, S&P. Gold is 100 per point, not forgiving for beginner traders. Yeah, and micros are a great way to. I don't know that I would recommend gold for beginner traders. I don't think it's the friendliest asset for a beginner, but micros for all level traders can be a really great way. Can be a really great thing to use. I use micros a lot because I like to scale out of my trade. And so that can be an option if you're trying to lower your risk a bit. Yeah. So Tiago said we are at all-time highs, and all this tariff and trade talks, we have to wait. Absolutely. I think that has a lot to do with it. Conditions have still been pretty good in the indices, but absolutely in gold, it seems to be kind of stuck. NASDAQ, NQ has more volatility than ES. Forex.
Before we continue this kind of a poll we're doing about the preferences of the traders in the different assets, let's switch a little bit back to our EU trade, or not trade, but opportunity we have been looking at, and we are on the 1 minute. There isn't a lot of, as we have discussed before, there isn't a lot of structures in that leg down. We would have wanted more indication, right? You want, as I said, they want to see multiple things telling you that it's going to react from one of these. There's only one structure, and it's either it's going to react to this, or to me, I don't see any else, because anything else for it to reverse from. We don't even have a 5-minute entry order block, because there is no 5-minute quasi. Look at that neckline, very intact currently. The behavior of the market of price action so far is very bullish. So it's now or never for EU. Either it reverses here. I'm going to take a trade on my account here, and let me put a trade on trading view. I'm going to put above this high, a couple of pips back, and I'm going to market. I'm going to target this. I'm going to do that on my account, but I'm going to leave this so we can check on the reaction. As you can see, going back, this trade doesn't have a lot to go with, but there is a structure there on the 1 minute, and it did react on that 1 minute right there. So that's the reason to take it, but it's very flimsy, I have to say. It only broke on the 1 minute. So that's not a lot to go with. The 2 minute, there isn't any structure to trade from, so you only have the 1 minute to go with, but it is in alignment with everything else. So I'm in moments like this, I would take that, even though this is not on the hourly alignment, as I mentioned a couple of times. This is not my main strategy, or according to the main strategy, the trade plan, which has very strict rules. This is a trade that I took here in my account, which is outside of my trade plan, but it's still in accordance with the concept, alignment, multiple time frame, multiple structures that will tell me that the possibilities are still present. If this doesn't hold, if this doesn't react and start creating on the other time frames, let's say the 2, you see that bearish order block that looks nice. It needs to, the next structure, the next time frame is the 3 or the 5. It needs to create some bearish candlesticks formation very soon. Otherwise, this trade will fail. You can see how the 5 minute did it close below. It didn't close below the level. So it still looks borderline bearish, but it didn't actually close below. So we'll have to give it some more time. This trade is something. It illustrates a little bit how I trade, using multiple time frames, structures telling me one thing, and understanding, this is crucial, understanding that not all reversals are going to go all the way to the end of the structure. The end of the structure is this, but understanding that what do you have, valuing that, assessing that. This is only an intraday, a possible intraday trade. It doesn't have the hourly alignment. It doesn't have the daily. It does have a daily order block here, so you could say it has a daily, but the alignment to the daily is not something completely present, because it doesn't have the H1. It only has the H2, and then the 5 minute, it didn't have a quasi yet. But this is something that I would be. Actually, I took this trade in my account. All right, that's something that I wanted to. We'll come back to this setup. In the meantime, let's get back to Deanna and the gauging of the preference of our traders today. What are they? Why they trade the assets they trade?
Yeah, I think a lot of people like the volatility in the NASDAQ. That seems to be the consensus. In the Dow, it's the points that it moves, and in the NASDAQ, sounds like it's the volatility. All right.
Makes a lot of sense.
Mm-hmm.
I would say if for those beginners traders who are, I don't know if this is I'm speaking to you, but if this resonates with you, are you a beginner trader and you're looking for volatility? I would say that's not the correct way to choose your asset. First thing, volatility is great once you have experience and you know what you're looking for and you know how to manage your risk and your psychology, all of that. But if you're not there yet, volatility can work against you. I would say, we shouldn't be looking for a higher volatility pair to trade, but a lower volatility. The same thing goes with the time frame. If you are a beginner trader, it's much better you look for higher time frame setups. Look at the hourlies, the 4 hour, or even the daily to begin with, right? Don't go to the 1 minute, the 5 minutes. Maybe even the 15 minute is too low of a time frame. Look for the hourlies and higher, because it gives you more time to think through. It's much easier on your emotions. As a beginner trader, you don't want too much volatility. Actually, you want little volatility, right? So I would go to pairs like the UAD, USD, or something, in any case, not a yen pair, which is known for their high volatility, but something that has doesn't typically jump up and down and wicking you out all over the place. So that's a little advice there for those. If you're a beginner, if you know what you're doing, you have your data on those assets that are volatile, and you're looking specifically to them because of that reason, then by all means keep trading them.
Yeah, I think, you know, for me, if I were to go back and advise my beginner self, I would say S&P number one, NASDAQ is a second great choice. And if I was forex, it would be Euro USD. And that the reason I would pick Euro USD and the S&P as the primary is just because there's so much volume in both of those. They're a little bit smoother and, you know, just a little bit more reliable. I don't know if reliable is the right word, but just a little bit more like steady hand. And so I would start with those two. One of those two, you know, if you're trading forex, then Euro USD and S&P is a good one for indices. And then, like I said, NASDAQ second choice. But NASDAQ is a fun asset to trade. Definitely keeps you on your toes. And with that, it's time for me to take off, Victor. So thank you, everyone.
Really?
Yeah, that hour went by fast. Time to get ready for the open.
It passes way too fast all the time, Deanna. Thank you for being with us. I'm gonna switch since you're going. This is the end of your section. I'm gonna switch to my screen. I would like to thank you, and it's been a pleasure as always. And come back soon whenever you can.
Thank you. Take care, everyone.
All right, there we have it. Dr. Deanna Cole, our host, psychology, in-house psychologist, trader, and so many great things as well. All right, so let's look at this trade. We'll leave it open and see how it goes. Remember, these reversal trades they have a low, by definition, the reversal trades, and that's what a quasi is actually capturing. A reversal trade has a low win rate, right? So you need to have your I hope that's not sounding let me take that off because I did have the alert there. I'm already in that trade, so I'm gonna take it off. Yeah, you need to have everything in place, and considering that it has a lower win rate, right, compared to, let's say, a trend following entry or setup. So that's something you need to be considering. All right, so let's see. Manish is asking a few questions, or one question here. Vinicius, thank you for all your engagement. I'm sure Dr. Cole is reading in the background and is appreciative of everything you guys are saying. All right, so this is the let me get this question answered first. So Manish is asking, how will we confirm those order blocks? Well, I don't know what you mean by confirming. You mean the entry, or what is the trigger? That's different things, right? Yes, I have a small position. I'm long as well from Tuesday. Remember what we discussed? I'm long from Tuesday. I'm in this position as a longer term, but on the shorter term, I'm taking a short for this possible reversal that we see on the 1 minute. We'll see how that goes. That's this trade. It looks right now like it's going to be broken and taken out, but that's fine. It's only one signal, and it's perfectly fine if it takes me out, right? I did everything I'm supposed to do, and that's my job. My job is, I'm not here as trader. We're not here to win every trade. It's actually impossible. So what we're here is to follow our plan, our back-tested plan, and if you did your homework well, then in the end, after 10, 20 trades, you will end up winning. And that's exactly why I can take these trades, even while it is against it. If I have all the information, all the indication, then I just take them. Exactly. You're always 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 follow your plan, right? Regardless of if the plan tells you to if you did your homework well, the plan should guide you towards profitability because you measured that and you tested it in sample, out of sample, did out of sample order block and back testing, all of that. The 50-minute order block is if it closes here, then obviously it will validate the order block. But I'm already in, so it doesn't matter. I just have to take it. If it takes stop, if it takes me out, then I take the loss. That's as simple as that. We have in the background, we have the man himself from South Africa in this corner coming up. I'm just kidding. Mr. Ashley, how are you doing today, my friend?
Good in yourself, Victor. A good day to
Awesome.
all the viewers and yourself. It's been good. It's been really good. Been listening
Awesome.
in while doing plenty of research, trading research, etc. But it's all good.
Awesome. We have a great last hour of our. We have saved the best for last, right? Ashley is with us today. So, Ashley, you mentioned doing some research. What exactly do you refer to?
Well, that's in relation to backtesting data, forward testing, analyzing the results and on a number of areas and seeing what adjustments, if any, to make. Over and above that, which is slightly different from what's been mentioned so far on the live stream, is that I continuously run certain demo accounts to collect data. The purpose is to collect data. So, for example, let's say we have a strategy, and within a strategy, there's a number of different options or settings to optimize and different ideas to research. Then we run them back to back so we can have a live collection of data to compare results, and then from there understand the weaknesses, strengths, and then to also then close the weaknesses or exploit the strengths, or understand what's the good and bad about any strategy, because any strategy does have good and bad points, weaknesses and strengths, and it's to understand that and then utilize that to the best of its ability in terms of a fully comprehensive strategy with different components together.
Don't forget to hit the like button, everyone, especially those automated traders out there who I'm sure this is their favorite section of our live stream. Looking because Ashley, you are from everything you have shown us, you are nowadays trading almost completely automated, right?
Basically almost completely automated. I don't forego hand trading. There is still some hand trades that gets taken, but that gets taken on a different strategy and different asset classes. So some of the hand trades is more specifically for stocks. So those are the areas where I might hand trade, but certain of the major asset classes being FX, commodities, indices, crypto, our core 18 symbols, our core markets, we automate that. So that always keeps on trading in the background. And then we layer different strategies on those symbols as well, in addition to adding various areas like stocks as well.
Awesome to know that. In the background, for those who are following the trade, obviously that trade was stopped out. We did see that coming after the entry. Let me leave it for a bit longer. The market actually coming back to what who was it? Manish was asking how the confirmation. How do I know about the on what basis you mark your order blocks? Okay, I understand. Yeah, that's the importance of understanding the question correctly. I'll come back to that after we talk about automated trading with Ashley. But yes, I'll talk about that with in some time. Today we do have a announcement coming from Trade the Pool, who will be with us. Mickey will come to show us to tell us about an announcement he has. So keep tuned, stay tuned for that, everyone watching, and those who are interested in trading the pool. And even if you're not interested yet, you might be after Mickey's announcement. So stay tuned for that. Okay, so come back to Ashley. You mentioned you still trade based on stocks. You still trade manually, but you're such a big advocate for automated trading, right? That's according to you, that is the way to move forward personally, right? For you, and you're in the phase you are. That's how you can keep on expanding and growing. Is that right?
Correct, Victor. I think some type of automation, as I mentioned last week, I think it is a pertinent area for every trader to have in their purview, whether it may be in the immediate future or a little bit down the line, depending on where they are in their personal journey of trading the financial markets. But I think it is something to be mindful of. And the reason I say that is because one of the most common objectives of the skill is to obtain some type of financial freedom or independence. Now, there is a time and place, so everything meaning that there is a time where you need to slog it out manually in front of the charts, understanding the structure, understanding the strategies, going through the data. But there's also a time, in order to get to that objective, you would need to actually, in a sense, delegate or remove yourself in your time away from the screen. Because if going forward, you're always going to be dependent on screen time, are you actually achieving that financial freedom or the independence? So again, I think it's important for everyone to have that, to be mindful of that, and then obviously consider the options available. But saying that, I think manual trading is still very, very highly important, extremely important to actually start with before going to automated, in my opinion. And then from there, having a combination of the two. And if I can just mention to some of the viewers, thank you very much for the welcome, Vaniscus, and I think it was the other one is, I forgot the name, Raphael, etc. So thank you very much for the welcome. Much appreciated to the viewers.
Awesome. Someone asking about Ethiopia having difficulty. I would have no idea, my friend. Woodock, if they can do, I suppose so. I mean, they can, every country decides for themselves about their rules. So I suppose so. I'm not no expert in the legal side of your country. So perhaps you should consider, looking for the local authorities in, the regulators to see what their stance is. One question, Ashley, and I'm sure you are the right person to ask this, and maybe this is too big of a subject to discuss in just a little bit casually, or maybe it's something that could start a discussion that we could continue for some weeks. But how do we? What are the bigger? Let me put it this way: what are the bigger? Because from what the viewers have heard you talk about, where you automate system, where you you have workers working for you, you are the boss, so to speak, or at least that's how you would like us to think, right? You become the director, the CEO of your business, and your EAs are basically your workers who are doing the heavy lifting, and you're basically have freedom of time, money coming in if they're profitable and all of that. It sounds almost too good to be true. Right? What are the risks of automated trading? What are the downsides of automated trading? Because there must be downsides. In the real world, everything has its downside. So, right? Could we elaborate a little bit on that? Like, what are the things the trader who is the aspiring automated trader, what should they look for or watch out for? Yeah, be mindful of.
Very good question, Victor. In relation to the risks of automated trading, I think the major risk related to automated trading is the fact of developing the skill. So, for lack of a better word, some individuals may think of taking the easy way out, and again, on on the marketplace, the MetaTrader marketplace or the different platform marketplaces, there's plenty of bots and EAs that one can purchase. However, there's nothing wrong with that. However, the most common area related to those bots is that most likely when one purchases, you're not fully aware of what the strategy is itself. So that's probably the highest risk. Our highest risk is just let's go automated trading and purchase some type of bot or obtain some type of bot where you don't understand the strategy. And more specifically, the more risk is you yourself lack the skills, whether it be the tech analysis, risk management, etc. You lack those skills. You haven't really been in the trenches to trade manually yourself. Those are perhaps the biggest risks in relation to automated trading. However, in order to mitigate or reduce those risks, if you take the journey which most of the viewers are taking right now in terms of understanding the skill of trading, and it is a skill, it does take some time. It does take your diligence as well as your perseverance in the skill, and to understand many areas and to go through many psychological aspects, then it is very easy then to transition from a manual system to some type of automated system. Whether or not you design or develop or code your own, or whether you purchase something, because then you are able to be more aware of what that strategy is. So those are the two highest risks in my opinion. If you mitigate or reduce those risks by taking the journey as a trader, basically then you only have upside, literally only upside, no downside. The other area to be aware of, and it's not a risk, is it does take time. It's a process in relation to trading. So again, I'm going to share my personal timeline from manual trading to automated trading. Again, that's my personal time frame. It doesn't mean it's set in stone for everybody, but just to give you a sense, I've been manual trading for close to 20 years. And only the last 5 years or so has been a development. It's taken 5 years or so development in relation to take a concept of going from manual to some type of automation 5 years back. And it's taken that time. So that just gives you an idea, but that's my personal timeline. You can't really use it as a reference because everybody's journey is different, but it's just used as an example. So I've spent the time in the trenches going through many areas. And again, like I mentioned before, even manually trading where you don't have a platform, you got to phone it into the broker. So it's experience in that journey.
All right. What would you say is the right path? Like I'm sure everyone listening, they might have already some ideas about and some opinions about bots, about how, it's too good to be true. There's nothing out there that you can actually buy that will be profitable because why would they be selling it? All those ideas or opinions. And what can you tell for the trader, to keep them safe? What can you tell them in your experience? What are the no-nos that they should think about?
So definitely coming back from the first area I spoke about, a no-no would be, don't think if you're very new to trading or novice to trading, don't think you can do that switch successfully, sustainably, and responsibly right now. Have that in your purview, even if it's your 5-year timeline, 10-year timeline, have that in your purview in terms of some type of automated. Number one. Number two, in relation to trading, even if you go some type of automated trading, there is still risk. You're still going to lose. It's not about finding the best bot or automated trading that's going to give you an 80% win rate, etc. That should be thrown out the window. The same basis of manual trading, the same approach, the same areas, the same losing winning ratios are going to be identical. All you're doing is being much more efficient, as well as you probably can gain efficiency in terms of the number of symbols you trade and the management more consistent. So there's a lot more upside there, but in terms of automated trading, don't think it's going to be completely better than your manual trading. Not at all. it could be even worse. So that's why the mindset must be identical for automated trading as per manual trading. And that's why it's important that individuals take that time in the trenches and to go through that process, because that's going to be the key thing. If you want to be responsible and sustainable, that is the key to moving from a manual to an automated stance. Unfortunately, there's no easy shortcuts.
Let's continue with that topic, because I think it's very important to, I don't know if educate is the right word. It sounds like too authoritative or condescending. It's not the intention to be that way, but we do want to give, with your experience, I think it will be a disfavor not to use that for, keep our traders safe and out of harm's way, so to speak, because there is a lot of trap, let's say, put it that way. Like, there is a lot of trap out there in the bots and things like this. So I think it's an important important topic to as a public service, right? As authentic traders as we are, who have the best interest of the viewers at heart. How would you advise someone who is already a trader and has a manual strategy and wants to embark on this automation? What do you tell to that person? Is that something for everyone? How do they know is it for them or not? And what should they do about that, that idea?
Very good question again there, Victor. So there's a couple of areas as principles. The challenge here with some of the principles is, how does one choose to go about executing those principles? Because there's many ways to execute the principles. So what I mean by that is, we've discussed now about the relevance or importance of having some type of automated understanding on your trading in the future. So we've checked that off the list. The next area is, as a principle, it is always rather preferred making that transition, to make that transition with the exact same strategy that you are doing by hand. However, the challenges for that is numerous for some people. And for example, what I mean by that is that transition, there's a gap between the trader and the practical areas to actually physically either code or obtain or have the right connections to translate your manual strategy into an EA or in some type of automated process. Similar to, if I can remember what Jonathan mentioned a couple of weeks back, what he's in the process of doing now. So there is a challenge about that. But the principle still remains, if possible, where possible, try and automate your hand trading strategy. That's probably the first bet. If you're not able to obtain those resources or close that gap, the next best area then is to start by using semi-automated tools in your existing hand trading strategy. So for example, there's certain tools, for example, when you work out the risk that the 5ers has shown, there's other tools that you can research and possibly obtain, where it could maybe add at the same time when you take a trade, add a second trade or different TPs, or somehow automate your risk management. So think of that as a starting point. Is there a way you can semi-automate your manual process now? That would be my recommendation as a practical stance in terms of taking your existing strategy and somehow automating that in your journey. That's the preferred. However, unfortunately, like I said, there's a number of challenges and gaps that may exist that unfortunately certain individuals may not be able to close. If you can't close that preference as a first, the next best thing on the list would then be to really have a look at certain of the bots that's available, but then you have to get ones and understand how it trades, backtest it quite a bit, really understand its strengths and its weaknesses, and then have a slow process to adding that to your arsenal, your trading arsenal, and a slow process in relation to that. So again, it takes time. It's all, unfortunately, one of the resources we need is time, and none of us either can create or make more time. So the best is to keep on thinking in your purview, start planning, because just by planning and thinking about it, you are utilizing that precious resource of time carefully and wisely, that you're thinking about it, plan it in your head, start to do a bit of research slowly, and then that way you're utilizing that time. Because unfortunately with everything, and such is life, is we do need time. The more you procrastinate about it, the worse it's going to be, and the more negative the perception of it. So again, it is unfortunate. There's many ways to skin a cat, and there's many ways to go about it, but the principles are there. Start with your hand trading strategy. If not, move to a already established bot, but you got to really do the hard work to understand your strategy, back test, forward test, and really understand the weaknesses and strengths.
Awesome. What about Ashley? Great points you're making there. Thank you. What about can you shed some light on optimization? That's a big thing with automated traders, because there is a right way of optimization, optimizing a strategy, right, where you have parameters, you have values, you have the logic behind it, and there's also, even though it's very tempting, but there's also a wrong way of optimizing your strategies, right? Your bots. But let's say you have a bot has some variable parameters, and you're looking for that profitable settings, profitable configuration. What are the wrong ways to go about it? And then perhaps what are the better ways to do that?
Great. Thank you, Victor. So the most common wrong way is individuals, at most times, the common area is the individuals think just by looking at a number or having different areas. So for example, if I could clue the audience in, because some audience may be a bit confused about this word optimization. Let's say you have a simple trading strategy as a moving average crossover. So if either two moving averages or just simply price crosses above or below a moving average, that technically is a strategy on its own. How successful or the weaknesses and strengths, that's not the focus area, but you could have any moving average from literally from 1 all the way to infinity. Okay, so obviously you wouldn't choose infinity because that's just that's just too much. But if you just take, for example, 1 to 200, a 200 EMA, there are 200. You could backtest a 1 period moving average, a 2, a 3, a 4, all the way to 200. So it's 200 different permutations, different areas of results. So that's what we mean by optimization. Most individuals, when they start down their journey, they think it's just purely a numbers game, which it is, but it's not solely a numbers game. If you just work on the numbers, you are extremely lacking matching the numbers with the actual skill of trading. So they'll have a look at the numbers, they'll run it because machines can run those optimization, they'll spit out the results. So the results are the results, but you got to match up the results and understand the strategy and really dig deep in terms of understanding what those results are telling you relative to the strategy itself. So those are the common mistakes. It's not about just ignoring the charts, ignoring what the strategy is and looking at the numbers. You have to combine both. So that's the biggest pitfall in my experience, and from individuals starting out on this journey of automating. They think they can just look at the numbers on its own and it's easy. That's not the case. You have to, and it's pertinent to match the numbers with the strategy of that automated EA or that automated bot. You have to understand where it's come, what it's trading, and match up, because at times with optimization, and actually in most cases, it's not about looking for the best result, the best profit factor, the best drawdown, the best recovery factor, the best win rate, the best reward risk ratio. It's not about the best. It's about a balance of areas through varying market conditions. And balance is a key word again, because balance, you're not looking for the best. You're looking for it could be one of the worst probable data areas, but matched with a most likely scenario. So those are the areas that's important to consider when optimizing. It's not about just running the tests and looking for the best number. You have to match it with the charts and the strategy, and that is time consuming. That's the area of work. And you asked earlier, what's the area that I'm involved in almost every day? It's part of that. That is assessing. That's where you take your knowledge and you understand your skill in trading, your technical analysis, you understand the strategy, and you try and decipher how the performance matches the strategy, where's the weakness, where's the strength. And I can definitely say that there's a lot of learning there, plenty learning and plenty insight, and it's a good journey.
Awesome, Ashley. Where else can the viewers, right? Where else can they get these kind of information, right? From authentic traders like yourself, Ashley. It's awesome to be here. Everyone watching, if you appreciate these topics, if you're thinking about perhaps acquiring or having your manual trades coded into, a bot, an EA as they are called, hit the like button. Let us know that you are interested, that you appreciate these topics, that you want us to touch upon them more often, because we do what we're trying to satisfy your necessities here. If you think this is something you want to learn more about, then hit the like button, indicating to us that is the case. Can we talk a little bit, Ashley, about the one of the dangers of these bots, which is over optimization, and actually the word is overfitting. That's a big thing with automated trading, as well with when you have these automated way of where you for example in all platforms we can do back testing, and we can set these look for optimization. We can optimize different variables, different parameters as we talked about, parameters as we talked about. But there's a hidden danger there of overfitting. What can you tell us about overfitting?
Perfect. Thank you, Victor. I think after I answer, maybe we could go to some of the comments just to address that from the audience. So we involve them to some extent, but we'll do that afterwards. And then to answer your question, Victor, the overfitting, and that's a common symptom of what I said earlier, where you just actually look at the numbers. But just looking at the numbers, a common symptom and a common outcome is you could be overfitting. And for the audience, just to understand that is basically you're trying to take the past data and basically mold your strategy to get the best results out from the past data. And that's what I mean practically, where a trader or a person looking to automate at that stage is too much focused on the numbers. It's matching the numbers with the strategy and with the market. That's why, in my personal opinion, backtesting in relation to backtesting and forward testing out is by far the more important one. So the backtesting, all it does is gives you a general idea that your hypothesis or your trading strategy or idea to automate has some type of validity. Meaning that if you backtest something and generally the performance or the data coming back is generally poor or negative, and you can't detect any particular strengths. And notice the words I'm using is because it's not just about the overall end result, the bottom line. It's not about the bottom line. There's a lot more you got to consider to say, does your hypothesis or your trading idea or strategy have merit? It's not just the bottom line. There's strengths and weaknesses to consider. But if you go through that process and you can't really find any positives there, then it's a good idea then to change or to go to a next strategy. If there is something there in relation to what I mentioned, that's when you really got to do the hard work and start forward testing and collecting data in a forward environment. That's why I always continuously collect data on a forward environment, always, and it continuously adjusts. And that's part of the work that you need to do. It's not just only leaving it to automate and that's it. There is involvement. You've got to get involved. So hopefully that answers it.
Awesome. We have a couple of questions from the audience. We also have Mickey in the background getting ready for the second half of our last hour to talk about TTP, Trade the Pool. They have Michael has a great announcement. I'll let that for him to do, of course. I think we have maybe a minute or so as he is preparing. Or are you already ready, Mike? Mikey, you are ready. Okay, so all right, so let's move on to, we'll come back to those questions if time permits soon. Let's move back to, Mickey. How are you doing, our friend?
Hey, Victor, Ashley.
Hey, Mickey.
How's it going?
We're doing great. Awesome. We have a great audience with us today. Very inquisitive with all these questions. We are short on time to answer everyone, but that's a good sign. It means that people are interested in trading and in today's stream. So Michael, you have something interesting for us today. Is that right?
Yeah, I got a few things. First of all, everybody at home, how's it going? I'm happy to be here, like always. Like always, we're looking for doing some disruptive things in the market, right? So we're always thinking about how we can bring something different to the table. And I think we did it this time with a stock trading competition that we are launching next week, 3 days competition. And it's not going to be just as simple as the previous ones, when everybody is trading and the one that gets the best skin, they'll actually take the prize. But we actually decided to do a group competition. That means that everyone are trading the same account, one shared account for everybody. And it's going to be with $1 million of buying power. So that's plenty to play with. And the idea is to work together and outperform the market, the QQQ, the ETF for the NASDAQ 100. So everyone is trading together. We're going to do that on our live stream and also on our Discord. So for example, imagine, Victor, you taking Tesla, 100 shares of Tesla, and 5 minutes later, I'm seeing another great trade in Tesla, and I'm telling you, listen, Victor, hit the buy button and get me 200 shares more on Tesla. And you do that, and now together we are basically trading that. Or maybe actually you're seeing a great short on NVIDIA, and you're saying, that's it, I'm going short on NVIDIA, but someone else is telling you, what the hell are you doing? This is definitely going long. So it's a lot of good chaos in that way, working together to try to outperform the market. I'm going to share my screen for a second just to show the guys at home how it looks like. And then if you guys have any questions, feel free. Let's see.
Yes, please do. It sounds very interesting, a competition, a group effort to be trading together. It's going to be fun. I mean, you got to have a leader, right? In such a, who gets to decide what happens for the group?
Yeah, so the idea is that everyone is doing that. Everyone can click the mouse key. That's
can I show your screen?
Yeah, for sure. That's a trade on the NASDAQ that I'm in. I shorted it here, and I'm waiting for the drop. Right now, minus 600. Let's see how it will work. Okay, so that's the screen basically, and I'm going to give you the link if you can share it with the guys here.
There is a link in the description. Everyone watching, in the description of our stream on YouTube, go to the link and you'll find, go to the description of the stream and you'll find the link to the competition of TTP to get your chance into this exciting competition competition.
Yeah, so we got 5 days until almost 6 days until it's done, the registration. Like I said, what we need to do is outperform the Qs, the QQQ, the ETF for the NASDAQ 100. So let's say the NASDAQ is doing 5% up at the end of the 3 days. We need to do 501, right, in order to win. And the best thing about it, that anyone that joins the competition will win a prize. And that's the idea, because we're all together, trading together on the same account and trying to outperform the market together, everyone that participates will basically get a prize. All you got to do is a classic registration. Just click it. You got the details below. It will start on the 16th until the 18th, and we will announce the winners on the 19th. We've got almost $700,000 in prizes, evaluation accounts, trade pool, and also merchandise. So just fill in the form. And of course, if you got any questions, go through the FAQs or put it here. You can download the platform beforehand. So you got like few days that you can play with the platform, the trading platform, in order to, just get used to it, do some trades. But the concept, like I said, we all trade in the same account. If Victor took a Tesla, everyone else cannot trade Tesla. They can only tell him go long again and again. Or we also have what it's called an opposite ETF, for example, or a parallel ETF. Let's say you trade in NVIDIA. You also have, and the symbol is NVDA. You also have an ETF for NVIDIA, which is NVDL, right? So you can technically also trade NVIDIA on a different instrument. And that's the beauty of, we got 12,000 symbols. So that's the beauty of the stock market. You can play around. It's a huge playground. So just go through the details, download the platform, play with it a little bit. And on the 16th, we will go live on our Discord, and also our live trading room. Going to be 6.5 hours. We're going to show all the trades. The participants actually going to see all the trades of the others, right? If we trading together, the three of us, you can see what I'm doing. I can see what you're doing. Every single thing, because it's literally one account that we all traded. So I'm excited about it. It's a unique concept. We are trying it, but I think it will work big time for everyone. Yeah.
Mickey, we got a couple of questions. It sounds very exciting. Who doesn't want a good competition? And this sounds like one. One question, or maybe the first one of a sequence of questions. So I understand that people can form groups, right? Is there any limits as to the number of participants in each group, or any requirements? Is there a minimum?
Okay, so no, in that case, we all trade in one group. This is literally one account. Everyone gets the login credentials, basically, once we're launching it, and you trade that account, right? There is no separate groups in that case. Everyone is trading together. One of the stuff that we did talk about, what you mentioned, Victor, is something that we did talk about in the past, and definitely we will launch it in the future, which is group trading competitions, or let's call it teams, right? So you got like 3 to 5 traders trading the same account against 3 to 5 traders on a different account. In this competition, we call it one for all, like the Three Musketeers, right? So we all trading with the same goal. We want to trade together and outperform the market.
So basically, it's one big group. Basically, it's not group trading, but community trading. It's the whole community that is trading together. That is a very exciting way to look at it. And how do you? So these trades are visible for everyone, but wouldn't that mean that there's going to be like many trades on the terminal?
Exactly. You're gonna have tons of trades all the way. Everyone will choose obviously his own strategy, their own asset. And again, because it's not just, when you trade in Forex, you have like 20 something pairs. Because we have 12,000 symbols, you can trade Tesla, Ashley can trade NVIDIA, other guy can trade, roadblocks, doesn't matter. Basically, we have many opportunities here. So there are going to be tons of trades, tons of positions, and we have $1 million of buying power to play around with. And for the guy that asked about communication, so basically on our Discord, we have a chat, and you can go, and the idea is that during the trading competition, you will be there trading with everyone else, chatting and talking to each other about the next trade or your position. You can ask, the guys that been there for a while, what do you think about XYZ, and tell others what do you think about their positions, and so on. And by the way, sorry, Victor, one more thing, because now I remember about the communication. We also have prizes for those that are going to contribute the most to our Discord. So for example, if you post in within the 3 days of the competition, if you post in on Discord your trade IDs, for example, you get rewards. And if you reach the most points, basically, you will get a prize as well. If you answered and help others to trade better, you get more points and potentially the prizes for contributing to the competition. So a bunch of those.
Awesome. I think it's going to be a great event. Mickey, thank you and what can you tell us about the prizes?
Yeah, so like I said, it's roughly $700,000 in prizes, all the way from merchandises that we have, like hats and shirts, cups, all of those. And of course, traded pool evaluations from 5 accounts all the way to 100K account, and hub credits as well. So we basically cover every prizes that we can put our hands on.
One question. Go ahead, Ashley.
Thanks, Victor. Michael, I think it's a great idea. Just a question is have you placed any restrictions on the weighting for the different stocks? So I'm assuming a participant is not able to place a long or short on, let's say, a MSFT for the entire account. So is there any weighting restrictions or allocations per participant in terms of trading that pooled fund?
Yeah, that's a great question, Ashley. One thing, it's limited to 10,000 shares per trade, right? Because we don't want one person to take the entire buying power. And besides that, we have, of course, like I said, if you buy 100 shares of Tesla, I cannot close your position. I can only tell you, go and buy more, or listen, man, you gotta cut this trade. Trust me on this one. And you will say, you know what? I'm down and I'm closing that trade. So those elements, the idea is to cooperate as much as possible and really work together. It's going to be obviously tons of traders and tons of positions, but just try to work together and find the right rhythm to, at the end of the day, perform better than the queues.
Awesome.
Excellent.
Awesome, Mickey. One question. We understand that each trade can only be closed by the person who initiated the trade. And can someone else trade the same symbol in the same direction alongside the first person who initiated a trade in that same symbol?
So if it's the same symbol, no. But so you can either, like I said, you can either tell the guy, listen, I think you should buy 100 shares of Tesla now, or you can trade the ETF. Basically the same. Let's say I'm going to put it on the chart so it will be much easier to understand. So for example, I'm going to take NVDA on the left side. Let's go to the 1 minute chart. And on the right side, I'm going to put the NVDL, which is the ETF double. So it's basically a double move of what NVIDIA is doing. So whenever NVIDIA is doing 1 cent, it's doing 2 cents, right? And you can see it's literally the same, like 99% of it the same as the same chart, right? The right side and the left side are the same. So a lot of those assets like NVIDIA or Tesla got an ETF. So if you shorten the NVDA and no one is shorting the NVDL, you can go there, right? If you want to trade the NASDAQ, the QQQ, and you took long and I want to take short, then all I got to do is go to the TQQQ, for example, right? And take short, or the SQQQ, which is basically, again, in this situation, it's a leveraged ETF. So it goes the opposite direction of the NASDAQ, of the underlying.
Yes. So as we understand, so it is per ticker, one trader can be active, but you can still, through leverage and inverse ETFs, you can play the same symbol, but it's going to be a different ticker. The same asset, I mean, but it's going to be a different ticker because it's a different trading vehicle, so to speak.
Exactly. Yeah.
Perfect. It sounds. Go ahead.
No. Like I said, also communicate between everyone. So you're buying 100 shares of Tesla. Tell me to buy 100 shares, and I will buy it gladly.
Awesome. I like. I'm sure we see that in the audience, we have many traders being very excited about it. Remember the link to the landing page that Mickey just showed is in the description of our YouTube stream. So keep an eye on it. Click on, try it out, and be part of this nice event.
Yeah, it's gonna be amazing, and like I said, first time. So we're definitely excited to see the results and everything happening in real time. You know.
Organized chaos.
Exactly.
It's gonna be nice chaos indeed. What are your expectations, Mickey? What do you think will happen at the end of the? I know it's a big question mark, but what do you think? What do you think will happen?
First of all, I really, like I said, I really like to see the engagement between each other, between us as traders, and just trying to really work together in order to push this through. And I believe we can outperform the market. I mean, 3 days with $1 million of buying power, good calls, we can definitely do that.
I see. And one ticker per person per time?
Yeah, basically, yeah.
Okay, I understand. All right, that makes sense to limit so that everyone get the chance to participate and trade their edge in the market while doing it together, interacting. And Discord is going to be the communication platform, as you mentioned, Mickey. It's going to be awesome during these sessions to see all the. So is there? I think those channels are going to be very, very busy discussing and probably many threads talking about each symbols and it's going to be awesome to see as a social experiment.
Definitely, and we're going to share that also on our live YouTube channel during those 3 days. So definitely go and check it out as well. Once you sign to the competition, you get an email with all the details and everything you need to know. So just go ahead and do that.
All right, there you have it. The TTP coming with STC. What I mean by that, stock trading competition from the Trade the Pool. As you can see, we are constantly trying to innovate and bring exciting things to you, the trader, to give you that impulse you need, giving you that community building, because this is going to make and build the community of traders who are looking and collaborating together to make the best trading decisions. So it's awesome, Mickey. I think this is going to be a great hit with our community, and it's going to be fun.
Yeah, for sure. Thanks so much for
what are
having you.
No problem, Mickey. We are in the last 7 minutes. Maybe, what do you think? Maybe there was someone in the chat that was asking about NAS. Maybe you can give this person maybe a little insight into what you think, since you trade the NAS, I believe, frequently. What do you think about the market?
Yeah, so definitely let's take a chart and play with it. I'm looking at the NASDAQ 100, the contract, the futures basically. One of the stuff that I'm watching is obviously because you see a lot of ranging, right? Big range of like 800 points, but still a range. I usually go a little bit further, trying to see the bigger picture. So like a 4H, 4-hour chart. One thing that we can keep in mind is that level, you can easily spot it, right? This extra support that became resistance, another resistance, play with it as support. And now we're basically trying to touch it, or actually touching it. So let's push it all the way to the right. And now that I'm zooming in, I can see a few things. This is why I took that short, right? I took a position just, I think yesterday. Again, it's still in a losing place, but at least in my opinion, it should work. It did work for a second, but I took only two contracts. So it dropped here, bounced, I added a few more times. And the idea is that, and again, maybe I'm wrong, but this is at least what I'm looking at, is that we had a nice move to the upside here. Then the next wave was nice, but much shorter than the previous one. The other one, like the third one, is a weaker one because you see that it's been shorter and couldn't push higher as the two previous waves. And now we get in the fourth one. So the fourth one is like a little bit more of a banana shape, right? If the first one was, or the second was a little bit more aggressive to the upside, now we get in a little bit of an angle. And this is what I'm aiming for. I want to see a weakness in the buyers, at least that's what I'm seeing right now. We are playing with the level of around 22,000 on the NASDAQ future. And that for me means that we should see a drop, maybe to try to take those liquidity areas at around the 21,000. This is what I'm aiming for. So I took those shorts, waiting for that drop. If it could go all the way to this area, you can again easily see. This is why I like to trade the NASDAQ basically, because you can easily see the levels, right? You have the resistance here, another one here, the area of resistance, then support. So it makes sense that if we will see the drop, it should go all the way to this area, which will give me plenty for that trade. So
awesome. And you mentioned you opened this trade, you started yesterday.
Yeah.
How long would you be expecting to be holding this? I mean, if it's continued to go sideways, would you just hold this until it does one of the two things, or would you have a time stop on it?
Yeah, I usually don't have a timestamp. I usually just wait for either close the position in a loss or in a profit. So for me, it could take a good few hours up until like 3 days, 4 days, something around those lines. But I want to exit it just because the time passed. I would exit it only because I'll see a progress.
I see. Awesome. Thank you. Thank you for your insight, Mickey. Go ahead, Ashley.
Thank you, Victor. Just some further insight in terms of the indices that we speak, and just to mention it as well. If you look at the three US ones, the major ones, Dow, S&P, and NASDAQ, out of those three, the much broader one is the S&P 500. Out of those three, S&P 500 and the NASDAQ are the most closest to its 52-week and all-time high. Now, if the S&P and the NASDAQ manage to get and break above that and follow through, there's a good chance that there's probably legs to making further all-time highs. But more specifically, the key area, in my opinion, is that S&P. The broader market needs to follow through and not just be in a handful of stocks that's actually making new time highs, because that's what's basically evident in the NASDAQ right now from the Mag 7. That's generally driving that index higher. If the movement higher is more broad-based based upon the S&P, there's much more sustainable legs for that move higher. Okay, if it doesn't occur, then just be wary of the breakout if it does occur. And then just a further insight, the European indices, especially the UK 100, the FTSE, that's already made a new 52-week and all-time high. So that could, the US could get its lead from Europe.
Yeah, that's for sure. And
Awesome.
I will add, Victor, one more thing if we have a minute. You can also, I definitely agree with what Ashley mentioned, and you can also watch the VIX, the VX, the volatility index. This is something that I usually do when I want to see basically the VIX and the S&P and the NASDAQ are going the opposite direction, right? A negative correlation. And what we can say is, what we can look is for another major support level on the VIX, because when the VIX is going up, the markets are going down and the opposite, right? So if we zoom in a little bit, you can see that there is a gap. We are at around 18 right now, but there is first of all, a major support at around 17 points of the VIX, and all the way down to the 1550, there's a gap, right? All this area, I'm gonna mark it just to clarify. So this area. So one thing that I would watch for is this area right here, the 1550. If we will drop there, that means that the market should go higher, right? The VIX is dropping down, the market goes up. But when we'll reach that, if of course, we'll reach that 15.5, then the VIX should stop and bounce up. When it bounces up, the market should drop down. So just try to play, if you trade in the indices, just try to play on those levels. You will see a resistance level on the NASDAQ, for example, and then a support level on the VIX, right?
Awesome. Mickey, thank you for all those great insights. What you're saying is basically you can use the VIX as an indicator to let you have an extra confidence to say whether or not the market is going to continue or perhaps going to reverse. That's a very good tip, Michael. Thank you for that. I'm going to switch back to to my screen just a little bit, because I saw in the chat that we have some traders who are selling. They are shorting EU. In my opinion, the area, I could be wrong. The market can do whatever it wants. But on the H4, the structure, the supply zone that we had, which was one of the ideas why I wanted to short EU from earlier areas, has been we are in the middle of these two. Yes, we have tapped into the next H4 order block, but the better place is above us, which has overlap with the H1. You can see it in the chart. Let's see if I can zoom it in. There, I indicated it with two horizontal yellow lines. That's the sweet spot. Of course, the market can reverse before that or have some top before that. But the other reason that I mentioned this is that the daily ATR, and remember, we don't have any big news coming up, at least not in the economical calendar. I do see the market reaction to this H4 order block, which is very interesting. But the daily ATR is above. There's still room for the price to continue. And if you look at the price action, it does. I do see, for those who are interested, I do see these reactions. They're very beautiful on the lower border of that order block. These are very significant price action cues to know what price is trying to do. But if you look at the overall market or the overall price action, it's holding up. Actually, I would say quite nicely. So this does not look like it's breaking anything, and that's why I like quasis. Of course, you can just go to the head, the highest point, and go look back to where the neckline is. And my neckline would be all the way down here. That means that even if it breaks these lows, it doesn't really break any structural, lows, anything that could indicate a reversal necessarily, right? So in my opinion, it's too early to short. I think the market can surprise us and have a little pop, perhaps to this area. And there, of course, I will be looking for those reversal patterns if they occur in the next maybe 2 to 3 hours. That's it for us. We have come to the end of our stream for today. I would like to thank you, Mickey, for your announcement. I would like to invite everyone to join this competition. All for one big account, 1 million purchasing power, a great event, very exciting. Ashley, thank you for all your good insights, and for sure we will continue the conversation about EA expert advisors, automated trading as we have done today. Very interesting. I think there's a lot of people interested and want to get their feet wet in that sense as well. So thank you, Ashley, and we'll continue that conversation soon. For everyone who is part of our Discord community, I will be hosting a workshop in about 40 minutes. I invite you to be part of it. I'll be glad if you did. And in any case, hit the like button on this stream and follow TTP. Is TTP coming? Is the link? Michael, are you aware of the link is after our stream for your stream for your YouTube channel?
It should be, but Jonathan will tell us in a second.
Okay, all right. In any case, I think that is the case, because that's how we usually do it. After this stream, we should have a link where it automatically takes you to the TTP stream. If not, look us up, TTB Trade the Pool, for more stock trading action. Thank you all, and have a great day.
Thank you, Victor. Thank you, Michael. Bye-bye, everyone.
Bye, everybody. Thanks so much. We'll be in touch.
Hold on. We still have to, let's see. There is a minor, hold on, everyone. Let me get something ready before we can close our stream today. So in the meantime, everyone is invited for our Discord community. I can't find the outro, but that's fine. All right, we'll leave it like this. Have a great day, and bye-bye.